Hello? Morning all. Microphone's not working. It is now. How are we doing? Morning all. Happy FOMC day. Morning Ian, Christian, Amy, Steve, Kenley, Virginia, Alan Bay. Can't say your first name. Evil, David. Oh my God. Gregor's, Baggy, Mumo. Mike, no audio, no voice. Mike, audio. Yay. Okay now. Morning, morning all. Morning, morning, morning. Updates. Windows. Don't you just love it? Every time I update Windows, the microphone decides it's not there anymore. You unplug it, you plug it in. This is exactly what they tell you in IT support, isn't it? Have you unplugged it and plugged it back in again? Oh, it works. Have you turned it off and on again? Oh, it works. It's amazing how turning stuff off and on works and doesn't work. So before we get going, I'm not saying anything until you've done it. 36 people. We should have 15 likes at least. At least. 20. Get in. Good job. Morning. Right, FOMC day today. So yesterday we had consumer confidence and jolts. Didn't really do an awful lot. It was bullish US. We had a bit of a move on the US dollar. Immediately undone. So, yeah, nothing happened yesterday. This is exactly the type of price action we expect now on FOMC week. Absolutely nothing until we get to FOMC, which is today. So that's this evening. So we've had the Australian CPI overnight, which came out all negative across the board. So fairly decent drop on the Australian dollar, not very big, and as you can see, some of it's all undoing itself at the moment anyway. So a bit of a drop on the Aussie, not catastrophic. We are expecting our CPI numbers to come down now. You know, we've been having high interest rates long enough that we should be having it come down. So that's all bodes well for dropping the interest rate in Australia, which obviously is negative. So, yeah, came down, but nothing massive. We've got the CPIs coming out today for Germany. Germany is reporting 6 different states. So the reason that is an all-day event is because we need to wait for all of the states to have released before we get the final number. But what you tend to find with the state results is most of them seem to be very similar. So once you've got 2 or 3 in, the market kind of knows what the overall is going to be. But they are expecting inflation in Germany to have remained stable and ever so slightly ticking up. So we'll see what happens with that. But that will have an impact on the euro today when we get the figures out. Big drop actually going on in the euro at the moment. Well, in the last hour. Bit of a whipsaw. We've probably had some results released, I would imagine. We've had German retail. But yeah, there's nothing else overnight to look at. So Microsoft issues light guidance as even Azure growth drives earnings beat. So there's your Australian figures. And as you can see, there's no other big news overnight. So yeah, we've got that coming out today. 1:15, it's non-farm employment. It's GDP for the Canadian dollar at 1:30. That will also affect US dollar movement. We've got the Chicago PMIs at 2:45, 15 minutes after the market opens. And we've got FOMC this evening. That's the biggie. So obviously the Fed fund rate is expected to stay at 5.5. 99.9% sure that is not changing. There's absolutely no reason for them to change that. They've come out and said as much. We're not moving till March, April. FOMC statement will give us some kind of immediate indication as to what their thoughts are moving forward, but the 7:30 press conference is the main event. So this is where we get to quiz the heads of the Fed and ask the questions and try and work out from their answers what they're going to be doing. So usually around about 8 to 8:15, once that press conference is over, we get a move started. But if there's something dropped in the press conference, the move can start sooner. So anytime from really, I mean, if that was to change, obviously, then we move immediately. But anytime really from 7:45 to 8:15 is when you'll tend to get the volatility picking up. So that's the main event today. I'm not going to trade indices at all today. I'm not going to trade the DAX. I'm not going to trade anything today on the indices because they've been an absolute ball ache all week. Literally move and do nothing. And then move and do nothing. So it's so difficult to make money out of it at the moment. FOMC week's proving to be something I want to do a little bit of investigation into and go back and look at previous FOMCs for 2 or 3 years and just see what the movement's like pre-FOMC. We've got all the dates. We know when they are. So I've got all the screenshots as well of all the opens. So that's on my list. Well, I'm going to. It's on my list to do. But it's just awful price action at the moment. So so yeah, no point in really trading the US this afternoon. We got 2:45 and we'll likely have a rotational session. So yeah, so that's basically today. So big day today. Tomorrow we got Lagarde speaking at some point in the morning, and then we go into the CPIs for Euro. We kind of know what they're going to be because the Germany ones today are going to give us a good indication of what they're going to be. So that won't really do an awful lot. But then we go into the pound rates tomorrow and US unemployment and US PMI and then into non-farm payroll. So this from today onwards, literally from this afternoon all the way to Friday, it's volatile news pretty much every day. So going to be a big week. Morning, everybody else. Peter, Evans, Yotko, Neo, how are we doing? So FX wise, we've got, I'm just going to concentrate on FX this morning. As I say, I'm not going to trade the indices this morning because they're a pain in the backside. Give me one sec. Something out over there. So banked already today. Nothing on the H1M5 account at the moment. Still sitting in DD, still stuck in these yens. We have had a move in the right direction, which is good. And obviously I took off a load of that yesterday. We hit propulsion and bounced straight out of it, and we're back up. You remember I said, all I want is you to break these lows. And we did it. So I got out. And now we're back up there again. It's just unbelievable. But yeah, so we have made a step down, which is good. We are rolling over. So today is going to be quite critical as to what happens with this. If we get a new lower low put in, it kind of confirms, I think, that yen is starting the rally. They're starting to pile a little bit more into the yen in preparation for that interest rate hike. So hopefully we'll get that confirmation today and we'll get that move down. So US dollar yen and pound yen are the only two really that are in a little bit of DD. They're in 1.5-ish. It's not a little, it is literally a little bit of DD. Haven't managed to do anything with this one. Obviously, every time we get anywhere near any kind of low, I'm taking some of it off just to get it in the bank. Because again, this rollover could take weeks for all I know. It's just a nightmare. But anyway, so those are the yens. Pound CAD, first position taken on, that was yesterday, wasn't it? First position taken yesterday, H1M5 mean reversion, 5-minute reversal alert was there, pushed down a little bit further. So first entry there, targeting propulsion. Euro pound have been in for a while as well. This thing's just stuck. we've got loads of volatility coming off of this week. So hopefully we'll get a move. I got out of that one yesterday on the push up with the anticipation of coming and retesting and going back up. So market structure shifting into bullish. So hopefully again today we get the euro figures for Germany bullish. I don't think they will be, but they might be. And pushing up. We've got obviously the pound interest rate tomorrow. So there's a good chance that that pound will start to weaken tomorrow as well, which will obviously rally this one. So I'm just waiting for this to kind of start to roll back up again, but at the moment just stuck in the euro pound as well. Euro Swiss, similar story. It's hardly any drawdown. It's only a couple of positions in that one. So target up in the propulsion gap. And Euro CAD. First entry yesterday. Target is up in propulsion there. We haven't gone anywhere. So that's what I've got on. 8%, 8.5% banked on the month. Not the best month in the world, but not like you can do in January. It's crap. ADRs today. Aussie dollar yen. So we've pushed down into ADR and bounced straight out on that Australian dollar move. You have had a reversal alert on it, but a very tricky one today. Not really going anywhere. There's a good chance I think we might get that continued weakness in the Australian dollar moving forward today. I'll have a look at one of the other accounts in a minute, which has got an Aussie New Zealand trade on, which I'm leaving on for the moment. But that's your first ADR reversal today. You've also had pound odd. So obviously there are Australian dollar moves today because of the Australian news. So we had the big rally. We spiked into ADR. Nice double top. And pulled away. So the 5-minute reversal alerts have already triggered on both of these. That was your reversal alert there. But again, we haven't really gone anywhere. We are low. But so all these ADRs, you're always looking for somewhere around about half an ADR, third of an ADR, something like that. Just they're scalpy type plays. So those are your ADR reversals. RSIs, there's not a lot to look at on RSI. Most of the stuff that we've had extended is all played out, hence having banked load this month, obviously. That's what we do every day, every month, same thing. Aussie dollar CAD is an H4, so that's just starting the bounce now. So you're just looking for some kind of bounce play like that. Yeah. Nice double bottom here, potentially. But again, as I said, this Australian dollar, that news is flat. It's down across the board. It's not down by much. We're talking a 0.1 miss on the trim. We're talking a 0.2 miss on the quarterly and a 0.3 miss on the yearly. So it is, the 0.3 is, if you look at where we were, 4.3, expecting a 3.7 and getting a 3.4, it is coming down faster, but it's not massive. But it's unlikely we'll see a massive bullish move off the Australian dollar at the moment. So I wouldn't look for too much of a pullback on anything. We're likely to put in another down leg. However, Canadian dollar news tomorrow, and we've got FOMC, and obviously the Canadian dollar moves with FOMC, moves with the US dollar. So if we get a massive bull move on the US dollar off of FOMC, we're going to get a massive bull move on the CAD. If we get a massive bear move on the US dollar, we're going to get a massive bear move on the CAD as well. So this thing, specifically the Aussie dollar CAD, could go either way, but it's going to be based on what happens this evening in FOMC. More likely it's going to do that, because that seems to be what we get out of FOMC at the moment. But anyway, pound CAD, same thing, extended to the downside. I've got a long on this from the H1M5 mean reversion entry yesterday. So that is also a 4-hour extension. Nice rejection down here, look. So big bull move. We put in an inside bar. Then we put in a retest of the previous low, rejected, and there's lovely wicks to the downside at the moment. So the sellers tried to rally through, buyers pushed them back, sellers tried again, buyers pushed them back, sellers tried again, buyers pushed them back, sellers given up. Highly likely we're going to get a rally off of it. But again, FOMC, interest rates tomorrow. So you got two big news catalysts. It's big news catalysts across the board coming up for the next 3 days. So anything you get into And this is the beauty of position trading. If you get into this H4 M5 or H4 M15 mean reversion, you're trying to play it back up into there and it doesn't work, doesn't matter, does it? We just wait and get in again. Beauty of position trading. News doesn't really affect us, because if news pushes against us, we just go, yeah, whatever, we'll have another one. Get out later. So those are your RSIs. There's nothing extended on the hourlies at the moment. There's nothing really getting close to the hourlies. I would be very, very unlikely that you will get anything on the hourlies today as well. So because there's nothing going on ahead of FOMC. So we're likely just to get sideways movement today. The Australian dollar is probably the only thing that you will get a bit of movement on. It might undo the move. And the euro, obviously, with the German rates coming out, there's a good chance that we might get some movement off of that as well. But we'll have to just keep our eyes peeled on that one, because the German rates come out, they just drop them. So we'll see. So there you go. That's today. So good month so far. It's the last day of the month today as well. So the other thing you need to be aware of today, especially today, because it's FOMC, and it's not often we get FOMC landing on the very last day of the month. But the last day of the month is where the market tends to unwind a lot of its positions. So you have an awful lot of profit taking happening. Because there's monthly and quarterly reporting targets to hit within banks and institutions for shareholders and for investors. So if you've got large positions in large profit and you need them on your books, you shut them, you get the profit on the books. So we quite often at the end of the month get quite big ADR moves towards the end of the month. We didn't get much yesterday, so it could well happen today. And it could well be that they just wait for that FOMC, get a confirmation of what's going on, and then they close their positions out. So we could have a very big move towards the end of today. Not necessarily, though. It really will, it depends on how they're balanced. There's nothing that we can forecast on it. We just know that sometimes end of month, and especially end of quarter, we get those big rallies in. So just be aware of that today. If things start really moving after FOMC, don't close out too soon. There's a good chance we could be seeing 150 ADRs plus. So just be aware of it. There's not a lot else I can bank at the moment on this account today. Pound yen is the only thing that I've got a possibility of banking. If we get back down to here, I may consider taking this one off and popping that down there. Because I'm just worried about us forming a new area of balance here while we're waiting for some news, especially tomorrow. So I'm just going to watch this one as we get down to the lows. I'm kind of hoping we just put a new lower low in today, but we'll see. And obviously US dollar yen, same boat. If we get some yen strength today, I'd like to get out of US dollar positions. So anything, again, if you're not on this afternoon, anything that you're holding US dollar or Canadian dollar today, in fact, anything you're holding pretty much full stop in FOMC, because everything will move. If the market moves, that is. Anything you're holding in profit is just worth banking. Just bank everything that you've got in decent money, because as I say, every time we cover news, one of two things is going to happen. This is either going to go into drawdown and you're going to lose the opportunity to bank it, or it's going to go the direction you want it to, in which case you've banked it, well done anyway, you've won, and all of this other stuff is going to go into profit as well. You've won again. But if it goes the opposite direction to what you want, that goes into drawdown, that goes into deeper drawdown, and you lose the opportunity to put any money in the bank. So ahead of a large news event, anything you've got in profit that you think might get affected by that news, and with FOMC, with any big US news, it affects every currency, because when we pull money out of or push money into the US dollar, it comes from all other currencies. So that's why the US moves everything. Stick it in the bank. Yeah. So obviously that's before FOMC this evening. There was no new entries taken today there. So on this account, on the ADR reversals, up 17.23% on the month. Phenomenal month. ADR reversals has these months like this, and it's the lovely rangy months because all you're doing is you're getting an ADR hit, you're getting out, you're getting an ADR hit, you're getting out. It's lovely. Doesn't do quite as well in big trendy months, but so yeah, 17% banked on that. Very nice return this month. Euro pound is bankable as well. So what have I banked this morning? Aussie New Zealand. So this wasn't this morning, it was last night. So remember I said yesterday I will be banking anything Australian dollar ahead of the news, because obviously if it went like that I lose and it goes into drawdown. So banked that, which was 0.28%. But I went to bed late last night, so actually I banked it today because I banked it about 10:15 or something after the swap. So the rest of the position is now in profit and bankable, but I'm going to give it the benefit of the doubt that we are going to continue that drop on the Aussie. So it's a nice market structure so far going in with a lower high. Now we've put our lower low in. So I'm willing to give it a push back up into sort of ADR 125 and assume it's going to put in a lower high down leg. It could well just accumulate today and drop, in which case that's fine. So target is still going to be down at this propulsion gap on the Aussie New Zealand, and the reason being is because we are going to find limit order triggers down at 125 ADR today, which is this previous week's low, week before's low, 3 week ago low. This whole area is where we were buying before we pushed up. And now we've obviously rolled back down. So I'm expecting some kind of reaction there. So I'm getting out before that propulsion gap, which is a nice little profit. Euro pound is bankable. So that's an ADR reversal from yesterday. Banking it is 0.25%, which is absolutely fine. So it's an ADR reversal. It's an in-out play. So we're looking ideally ADR reversals. It's a scalping strategy. So ideally you want to be in and out in 24, 48 hours. It's fast. It's in and out. This is why it's slightly higher risk, because we expect to be able to get out quicker on these moves. So yeah, out of that one. So that was straight in yesterday. So ADR hit yesterday, 5-minute reversal alert. I've got real bad gap in data on this platform for some reason. I don't know why. This one's fine. I don't know what the wrong problem with that that one is, but so euro pound, your reversal alert was up there yesterday somewhere. There, wasn't it? That was the entry. So there, out on the ADR push. So out that one. Why is that not loading that data in then? So Aussie New Zealand, as I said, I'm going to hold on to that one for the moment. So 0.59 banked today. Pound yen is still in DD a little bit, but it's around about the average. So again, I'm targeting just down here to get out of this one. So a lower low today. CAD Swiss got on as a short, targeting back down at those lows. That was the ADR reversal there, short. So might have to scale into that one depending on what happens with FOMC. We'll be getting in up at ADR. And the other thing I've got on this is Euro CAD, which is a little bit stuck at the moment. So again, I need some Canadian dollar strength. Lovely propulsion targets to the upside. We've got 3 really nice untested targets. So if we do get a push down, i.e. we get US dollar strength, or we get German weakness today, I'll scale in again. This whole move then is going to be do a pullback. If you look at it on the 4-hour chart, it's quite a a clean move down, apart from that one little spike we had yesterday. But looking for support on this, you haven't really got any support. We're out of this massive 7 weeks, 7 week, missed one, 8 weeks accumulation. So 2 months we've sat sideways on Euro CAD, bang in the middle of that up leg. So there's a good chance, I think, we might come down and test these lows, but it's really going to depend on this. We need strength in the US to be able to drive this down there, and we need weakness in the euro. The euro's CPI is ticking up, and the US isn't. So it's actually the opposite. The euro is a little bit stronger than the US and the CAD at the moment, hence why we've been doing this. So I think we're more likely to do something along those sorts of lines moving forward. There's no real reason for these two to move with any real strength in the next sort of month or so. So we'll see what happens. But yeah, in that one long at the moment, and that's about it. So yeah, lovely month on that. 1.8 drawdown holding over. And hedging, 3% of drawdown, done 9.5%. Banked one this morning. Pound odd. So again, that was an easy reversal straight up into resistance. So I got out of resistance. That's why. So yeah, that was a lovely exit. So basically saw that this morning. We had a big rejection at ADR. We rejected it again. We looked like we were starting to reject again. So I got out because it was an obvious double top bounce potential. And it turned out to be a double top bounce. So nice exit. Everything else is just sitting there at the moment. There's nothing big enough really to bank. Everything's sort of that is profit is about 0.25%. But same as all the other accounts, I will be basically just closing out anything US dollar wise or CAD wise that is in decent money ahead of FOMC. So morning everybody else I haven't said a morning to. Since you're not trading the indices today, can we expect 5 clean breaks and reach 5R in the first 5 minutes? Quite possibly, yes. 5R days might roll in when we decide to sit out. Typical markets, normal. Almost 5R on the FTSE, is it? I haven't got my account there. I don't want to know. Did 12% this month on ADR reversals with 0.1% risk. Good job. Yeah, ADR's been good this month. Very, very good. So yeah, it's one of those things with with the 3 different strategies, because you've got H4, H1 mean reversion, you've got ADR reversals, and obviously the hedging strategy now. It's like this is what I noticed running all 3 of those strategies for a year on the VPS last year. So they were all running concurrently last year. And when I went through all the results, I went through the results month by month, there was always one that was very profitable. And there was always one that was not very profitable. And there was always one that was mediocre. And occasionally you get all 3 of them, which were fantastic. But there was never a month where all 3 of them were hideous. So it's nice, I think, to run the diversification across the 3 strategies. You are going to get a lot of duplication, though. So you've just got to be aware of that and not worry about it. So the ADR reversals account will go into drawdown at some point heavily. And so will H1M5, because it will get into very similar trades, whereas the hedging one won't have the same problem. So you just got to know what is going on and what you expect to happen, and just accept it when it comes, basically, because ADR reversals are going to be very, very similar. You can see the positions I've got on: US dollar, yen, pound CAD. Pound yen, got Euro CAD on there instead of pound CAD. But we got Euro CAD on there, Euro Swiss, Euro pound. It's going to be very similar because we've got, if an instrument moves, it's going to move to ADR as it gets to its RSI. So there you go. SIH on UK 100 was perfect today. I don't want to know. Typical. Amy, would you like to do my trades, please? Amy's not doing anything clever, I don't think. She's using the strategy that I teach, and I think the EA that I have out there to trade the strategy that I teach. It's nothing different to what I'm doing in here, is it? It's ADR reversals. I'm not doing anything. The EA is doing all of this. All I'm doing is shutting stuff out, literally. I haven't done anything on this account, manual, this month. I don't think. Let's have a look. So here's the account history this month. Unless you see a blank space there, the EA took everything. I haven't touched it, right? There's my deposits this month. Not me, it's the EA. All I'm doing is when the EA gets into a trade, all I'm doing is setting targets. So I move TPs. That's it. And you see me do it every day. All I'm doing is I'm targeting propulsion gaps because that's where the price is going to go. And if it doesn't get to that one and it pushes up to that one and makes a new one there, I move the targets up to the next propulsion gap that is below the average price. It's not rocket science, is it? Really? But the EA just does it automated for me because I can't be asked to watch the charts all day long. So I'm not surprised Amy's made a profit. So have I, using the same thing. I can sell you a signal. Don't become a signal service. Do you know what will happen, Amy? As soon as you become a signal service, you'll have a bad month. And then you'll just get nothing but people moaning at you. This is why I don't do signals. Because people that follow signals are expecting you to make them money. When you have a bad month, because nothing to do with the strategy or the system, because the market wasn't right, and the market decided it didn't want to work with your strategy this month, they will moan at you. They will scream, they will shout, they will threaten you. I ran a signal service a couple of times about 3 years ago. Never again. I know it's just a joke, but seriously, don't do it. There's a guy that wants to use the market reversal alert CA to run a PAM. And I said to him, you're mental. Why are you doing this? And he was like, because I want to make money. Right, well, go and make money then. Why are you setting up a service where you will trade other people's money? Because I want to make more money. It's like, well, what you're actually doing is you are using other people's money and risking it for them. When you're in 15 to 20% of drawdown and that phone call comes in, what are you going to say to them when you're in 20% of drawdown? Don't worry, it's normal. They won't understand that. The worst job in the world, managing other people's money. I don't know why people want to do it. Awful. Stress? Christ, I do this to have a stress-free life. What I don't want to do is have everybody else's stress on my shoulders. Have enough stress trying to provide for your family, let alone other people's families and mortgages. Not a fun job. Signal services are a scaled-down version of that, basically, aren't they? Unregulated. I'm running ADR on a 25k account since the 15th of January. So far made $1,000 with $163 of drawdown. Currently, I only got one trade, Euro CAD. Good job. Razvan, why your entries are 0.26 lots, 10 times bigger than your advised bootcamp? No. Razvan, go back and watch the bootcamp. What do I recommend in the bootcamp? Not going to know that, are you now? So in the bootcamp, I say use 0.01 per $1,000 in your account as a rough gauge, yeah? If you want to be aggressive, 0.01 per 2,000 in your account, yeah? What am I trading here? $30,000 account. I've taken one position with 27 there. What is 0.01 times 30? What am I doing wrong? Sorry. Come on. You need to go back and watch the bootcamp. Seriously. Tell half to go short, the other to go long. That's the blueprint. It probably is. Yeah, it probably is for a lot of them, isn't it? My brother-in-law looked into one. It's quite a famous one. I can't remember the name of it, but they're all over social media. It's a massive scam. I logged into that. They give the logins, investor logins for one of their accounts. And I was looking at it like, this thing it can't possibly do what it's showing in these accounts. It's all manipulated. They've got their own server, I reckon, their own MQL5 server, like a broker server. They're manipulating the data in it and stuff. The strike rate was 95% on a 5-minute time frame. It's like, first of all, you'd never be able to copy the trade. Some of the trades were in and out so unbelievably fast. But you have to ask the question, are they giving one signal to one pack of people, another signal to the other pack of people? One of them is going to be right, isn't it? You only need to keep these people happy for a month, and then you take the second month out of them, replace the people that lost there with new people, and if they have a down month, they'll have an up month. You're constantly going to have some people that are in profit and are recommending it to their friends, and then they're coming in. 99.9% of the signal services and PAMs out there are utter scams in some shape or form. Many of them are ones that you just physically will never get those trades on. You will not get the execution. And some of the strategies that are run are very high frequency trading strategies, and your broker won't execute them, or your spread will be 1 pip higher, which will ruin the edge of the entire strategy that they're trading on a demo account with the tightest spread possible and no commission. You can make anything look good on paper. Yeah, I can run a back test with the market reversal alert CA that is as profitable as hell, but I will have set everything to fit the exact market conditions so that it would have never lost money. Not going to happen, is it? In the real world. So I could run 10 accounts with an EA and have the EA set slightly differently on all of them. And then at the end of the month go, hey, look, here's the live trading accounts for this account. Da, 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 da. All a load of crap. And you're still, and you still get subscribers paying you. Criminal but brilliant. I know. Very clever. But this is why nothing ever works. This is the problem, isn't it? Everybody tries everything. You try signal service. Signal services look great on paper, but they're not at all, are they? I've got an FX Blue account running at the moment on my on this account actually, which I set up because I just wanted to see how it worked, and how it tracked and what it did. And it's just annoying. Look, it shows the deposits. Oh, there's cumulative profit. Oh, that's better. That's a better view. Why didn't it do that as default? That's an awful view. That's what it should have, shouldn't it? Return table as well. Oh, that's good. Look, 8.6. There you go. 8.6. 8.63. Because the idea was I was going to maybe put these on the website. So that people could just track what's going on. Orders. Why doesn't it show open orders then? But you know, what they show you is that they'll have 10 of these running, these scammers, and they will take trades in such a way that they will always, it's like prop firms, isn't it? You take 10 evaluations on prop and you take different trades. Just by pure luck, you are going to pass some. You run 10 trading accounts. By pure luck, some of them are going to make money. And those are the ones you basically sell. You go, look at the returns. This is a new account, and obviously off you go. And then that's what they do, isn't it? They're all comment. Anyway. I really wanted this because the idea of what I was going to do was put this on the website so that people could track my orders while I'm not on. But it doesn't seem to show open orders, does it? No orders to display. Is that euro pound up there? Oh. Euro pound 26th closed on the 30th. New Zealand US closed today as well. Yeah, so it's feeding through live pretty much. 155 and 648. God, 101 hours I held that trade for. Look at that. 265 hours I held that pound yen for. Look at the swap, $225. Oh, there you go. AZ, are you in here? You've just messaged me on Telegram, so you must be in here. This is one of the reasons I was doing this. We were talking about swap yesterday, and AZ wanted to know what my actual swap figure was. There it is. It's there. $688 is what I've paid in swaps this month on a 30K, 50K account. 30K, 50K. This is the 50K account. So yeah, there you go. So that's what I was setting this up. I haven't used this properly. And you can set up portfolios. So I can have all of my accounts running as a portfolio. And I want to put all this on the website. Just so that people, but the main reason I wanted to do it was so that people could see my orders. And that is the one bit that just for some reason doesn't seem to work, which is very annoying. Look into that. Anywho, forget that. Morning, Chucks. Morning, Franco. Swap or slap? That's swap. That's cost of doing business, Franco. There's nothing you can do about it. You have to pay it. If you don't want to pay it, you can't trade. Forget about it. This is kind of what I was saying to AZ, because he's got one of these swap-free Islamic accounts. And I said, there is no such thing as a swap-free account, because they have to borrow money and you have to pay an overnight swap. There is nothing you can do about swaps. So if they say they're giving you a swap-free account, they're not. They're just charging you an amount of money instead of whatever the interest rate is. And obviously it's going to be higher than the interest rate because they need to make money. So yeah, we were trying to figure out whether or not it's better to have an Islamic swap-free account which charges a fixed rate, or whether it's better to have a proper swap account. And it turns out he was paying 2.5%, and I paid 1.4%. There we go. There he is, AZ. Did you see that? You are in here, obviously. So yeah, my FX Blue account actually breaks it. I went through all the hassle of exporting my statement, doing the maths, etc., blah, 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 blah. And it's all in there, look. Tot it up. I should have just gone to this because it's there. A lot easier. There you go. So on a 50k account, I've paid 688. So 1.37%, 1.4, rough. Morning Champagne. Paid 1,260 euros swap fees this month on a 100k account. So roughly double. There you go. So you've paid roughly double what I've paid, because your account is roughly double the size of my account. Okay. Just one of those things. Cost of doing business. Got to do it. If you're trading yen all the time, the swap is huge. Yeah. Or you could not trade yen and just miss out on all the opportunities of making whatever I've made out of the yen. So this is what it always comes down to, isn't it? That filter's terrible. So I would have missed out on that $150 if I hadn't traded the yen. I'd have missed out on that $150 if I hadn't traded the yen. I'd have missed out on that $240 if I hadn't traded the yen. I'd have missed out on that $1,500, $1,200, about $1,200. Actually, less than that because it's that drawdown. So 3, 6, 7, $700 or $800 if I hadn't traded the yen. Yeah. So regardless of what that has cost me, yeah, I've paid $225 in swap on that particular trade, but I made $1,500. So would you rather not have the $1,300 because it's expensive to trade the yen, or would you rather have the $1,300? The cost of doing business, nothing you do about it. The swap is relevant to the lot size. And if you take a big lot, you're going to have a big swap. But then again, you're going to make a big amount of money. All relative. Doesn't matter. Forget it. You can't do anything about cost of doing business. It's just what it is. Forget about it. Did you see what I sent you on Telegram? No, because I've been in the live room. My first 6 months position trading up 64%, around 10% a month. I've been trading for 4 years, but I wasn't producing these kinds of returns. Okay, so can I share that? Well, I just shared it. I just said it, but your chart. So this is there's nothing bad on there, is there? There's nothing. So that's AZ's results using position trading in the first 6 months. There you go, 64% return, roughly 10% a month. Exactly what I say in the bootcamp. Somewhere between 5 to 15% a month is what you will get consistently if you do it my way. Hard not to. Stop using stop losses. US Fed talking drop in rates rumors. What would landscape be if they do nothing? We'll go sideways. They keep talking drop in rates. This is all we've had, isn't it, from the Fed, is the drop in rates rumors. And, you know, it's coming down. It's definitely going to come down, the US dollar. And what, you know, it's the biggest currency, it's the world's currency. So when we started talking late last year, March, maybe April, obviously we started selling the US dollar. And we will continue to do that. But what we've had is a bounce in CPI larger than expected, which means it's put it back a bit. So it will come down, the US dollar, but then so will everything else. And this is the unknown. This is where every trader is in the same boat at the moment, banks, institutions included. We've never traded through an 18-month rally in interest rates like we've had. We've just had the biggest rally in interest rates in history, fastest rally in interest rates. And then we've stopped because we've got on top of inflation. Now we've got to go down the other way. We've never done this either before. So how is it going to affect the currencies when the US dollar drops? Yes, it's going to come down massively hard. But when the Swiss franc drops as well, the US dollar is going to pop against the Swissy. So are we going to, what sort of price action are we going to get on the way down? Are we going to get a hideous squeeze, or are we going to get normal market structure because everybody's doing the same thing at the same time? If the euro goes first and they go before the US dollar, that's going to come down super hard. And then when the US dollar does its interest rate change, it's going to come up super hard because as they drop their interest rates, they will then pause. And the US dollar will drop its interest rates, so the euro US dollar will go up. So the speed and the style of move we get is going to be dependent on how quick the interest rates come down and how in sync they are. If the euro announce 1 week their interest rate is dropping and they drop their interest rate, and then the next week the US announce the same thing, that happens to the euro US. Then the euros say, we're dropping again. And the US say, we're dropping again. And then the euros say, we're dropping again. And the US say, we're pausing. And then the euro goes, we're dropping again. And the US goes, we're dropping. Yeah. So you're going to get the same sort of price action, I think, that we had on the way up, where you get accumulation because you've got a weak euro against a weak euro, which means there's no movement on the euro US. And then all of a sudden, one of them will unexpectedly drop or will drop bigger than expected. And you'll get a big drop, which will last for a few weeks, and then we'll stop and we'll pause. But if the other one then goes double drop, we go up twice as fast. This is how fundamentals influence FX markets. What do we do if the US suddenly go, nah, sorry, it's going to have to be September now? That doesn't mean the US is bullish. It just means the US is not bearish. So what's going to happen is these guys, the smaller crosses, are the ones that are going to start to move the market and become the dominant currency. It's impossible to forecast. Just can't tell, can you? So it's going to be a tricky year this year. We haven't. I personally have never traded through an interest drop like this, and I don't think many traders have. So it'll be interesting to see. If you go and look at interest rate history, if you want to know what happens, so this is COVID. There, yeah. So you see what happened in COVID. We went, holy crap. And everybody either went negative or zero or virtually zero. Yeah, everybody did the same thing. And then 2 years after COVID, we went, right, we're going up. And we went up so fast. I mean, we went up in 0.5% increments, 0.75% increments, 0.75% increments. Then we jumped from 2.5 to 3.25, 3/4, half, quarter. We slowed down. So this, in literally in 3 or 4 months, we went up 2-3%. We don't do that. Not normal. What is normal is this. We sit on a healthy interest rate, which will tend to try and match inflation. So inflation target is 2%. If you can get a 2% inflation target, your economy is constantly growing, your GDP is going up, everybody is wealthy, nobody's paying too much, nobody's earning too much. It's all nice and happy, and everybody's dancing around with flowers, and it's all lovely. Yeah. So what you do is you keep your interest rates at a similar sort of level, because the interest rates keep this happening. Then something becomes unstable. Prices for oil will fly through the roof, and you're suddenly like, holy crap, everything's gone up. Okay, well, we're going to put your interest rates up ever so slightly because we don't want you to spend much money. So it comes back down again. We want you to save money. Interest rates go up. It's better to save everybody, don't spend. And then that inflation comes back down again and everybody drops, and that's basically what happens. This is what we're all used to trading through. Yeah. Every now and again, we'll get a 0.25% increase. So we go 1.25, we stay there for 4 months. We go up to 1.5, we stay there for a couple of months, up to 1.75, we stay there for a couple of months, up to 2. This just happens to be a very slow increment. But then what we were going to do was come from 2.5 to 2.25 to 1.75. So that whole cycle there from June 2017 until what would have been June 2020, so about 2 or 3 years, we only moved 1%. That's what we're normally used to. And that is healthy market structure. It's healthy, like ever so slightly stronger, ever so slightly weaker. Nothing goes mental. Yeah. This is what we got. And COVID was we went from a negative 0.5, we jumped 0.75. Remember that last period where everything was happy and flowery and everything was nice? We moved about 1% in 3 or 4 years. We moved 0.75% in a month, then 0.75% the next month, then 0.75% the next month. We've never traded through that sort of economy before for decades. Certainly not in my trading career. We've never come down the other side either. If the other side is coming down this fast, we should expect the same conditions. Huge bull volatile changing into huge bear volatile, huge days, ADR going up, expanding massively. But we don't know. They might come down in quarter increments over the next 5 years. We have no way of knowing, and it's all dependent on what inflation does. So again, we are moving into this year new territory, never been here before. How's it going to affect the stock markets? Are the stock markets going to boom or bust? I don't know. We normally used to a lovely bull market. We haven't had a lovely bull market since 2021. We've had complete nutty bear volatile market, 3 times the volatility, and it's crashed for 1.5 years. Never had that before, ever, literally ever. So what's happening the next year? It's you've just got to adapt, basically. As long as you're using ADR to measure what is going on in the market, you'll be fine, because this thing changes. So the worst case scenario, you're only ever going to be 2 weeks out of sync with what's going on with volatility, because we're using the ADR 10, we're measuring the 10-day volatility of the instrument. Therefore, if you're using ADR to measure how far you should get in and use your lot sizing according to ADR, you can't really go wrong. Because when the market gets explosive and contracted, your lot sizes are going to contract, and we're going to target bigger pip moves. When it gets all squished down, we're going to use bigger lot sizes, and we're going to target smaller moves. Always be targeting a percentage return. Never an amount of money, never an amount of pips. If you concentrate on this will automatically just grow by a percentage, regardless of what the market does. I've done absolutely fine the last 2 years. No problems, have I? While I've been YouTube streaming, anyway. Because I've just been following what the market does and adapting to the market. Occasionally, you're going to need to adapt your RSI, maybe. You know, we might get to a period, which we did have, where we were sitting there going, nothing's lighting up. This dashboard has been white for 3 weeks. We've got to do something. So we increase the instrument sensitivity of the RSI, and all of a sudden we start getting signals coming through. Yeah. If we get too many signals coming through too often, we'll need to tone that back down again. Until it happens, we just stay where we are and adapt. But you've got to be able to adapt. Literally just changing an RSI number from a 14 to a 21 is enough to filter out too much of that movement. But you're not going to know it until it happens. And until it happens, I won't be doing anything. We don't know when it's going to happen. I suspect either the euro or the US will be the first to move on interest rates in March. Forget the yen, that could happen any second. But one of those two is going to be first. When that happens, that is when I think we're going to shake up the market and get back into normal trading conditions. For the next month, in February, I get the feeling we might be looking at what we've just had in January and what we've had in December. Real uncertainty, real contraction, no idea where we're going. But we're not going to know that until it happens. Yeah, so you're going to be trading through this, which means if that is the case, ADR reversal strategy is going to be king. Because if it keeps going up and down and up and down and up and down, this thing is just going to keep milking money out the market over and over and over and over again. Anything higher time frame, like 4-hour mean reversion, is going to struggle because it's not moving far enough to get you in and out of 4-hour RSI extensions. We've had so few RSI extensions on the 4-hour. That's ADR. But we've had a few ones, haven't we? Quite a few ones. As you can see, I mean, the P&L speaks for itself, doesn't it? We've had a decent amount of movement on the lower time frames, but higher time frames and the dailies, it's like that. Support resistance is more and more and more important when you get into this type of market condition, because that's all it's doing. As you can see, it's just bouncing from resistances down to supports. And then it'll break, and then you'll repeat. Yeah, so we get into balance. We're happy here. There's a news event. Okay, we've had the news event. When's the next one? Next month. Don't do anything then for the next month. That's what the market's doing, isn't it? You're using the set files as they are on the website? No. I don't use them as they are on the website because I don't have fixed TP targets. I dynamically target propulsion gaps. So it's basically the same thing, pretty much. It doesn't matter, Sarah, what you use. I get asked this question all the time. Do you use the 14 or the 21 RSI? I use the 21 at the moment. Use whatever you like. Yeah. Look at this New Zealand dollar CAD over the last, this is the entire month of January, right? How many signals have I had? Is this the best to use? Yeah. So what should you be using? The 30, because you would have had a short there. You'd have had a little long there. You've had a little long there. You'd have had a long there. Should have used the 30. What's better? Right now, the 30. What's better next month? What was better the month before? Don't know, go and have a look. Every month is going to be different. It doesn't matter what you use. What we're looking for is the market stretched and moved in one direction? Yes. How much? And that much or that much? There's a difference between that and that. Roughly half an ADR to an ADR. So whether you get in there or there, irrelevant. You're in. Because the market's stretched. What's it going to do after it stretches? Pull back. What it does. Stretched, pull back. Stretched, pull back. Stretched, pull back. That's all it does. So it doesn't matter what you use. If you use the 14 or the 21, up to you. You'll just get a different signal. That's it. You will get a different condition of stretch. But how far is an elastic band going to stretch before it pings? You cannot tell that because you can't see into the future. So it doesn't matter what you use. You use what you're comfortable with, what you fancy, what you're happy with. How far is it going to move? Is it better to get out after a quarter of an ADR or a half an ADR? I don't know. Depends how far the market goes. If the market goes a quarter of an ADR and then pulls back, it's better to get out a quarter of an ADR. If it pulls back half an ADR, it's better to get out of a half an ADR. I can't see into the future, so I don't know. Pick one. If it works, great. If it doesn't work, deal with it. Move your price and get out later. That's position trading. You've got to stop focusing on the best. There is no best. There's different. What's the best? There is no best. The best is the one that makes you money 100% of the time with one entry and one exit. You're never finding that. You've been hunting for the Holy Grail your entire trading career and you haven't found it yet. The reason is because there is no best. There is no Holy Grail. You just get into the market and wait. Whether you use a 14, a 21, a 30, a 68, an 80, 75, doesn't matter. All that's going to happen is you're going to get into a different trade at a different time than I am. Whether that trade works or not has got the same odds. It's going to go up or it's going to go down. You're going to go into drawdown. You're going to go into profit. It's 50-50. I don't know. You don't know. Nobody knows. So forget which is best. It's just different. Doesn't matter. Doesn't matter. Don't use an RSI. Use a CCI. Use a MACD. Use whatever you like. Doesn't matter. Doesn't make any difference. Where these MACD traders that got the best indicator in the world, how many times does that work? 50%. Why? Because when they get in on that MACD signal, the price either goes up or down. Use a Bollinger Band. Use a moving average. I don't care. Doesn't matter. Use anything. Just don't use a stop loss. Because what happens with stop losses is you stop out of the market with a loss. If you don't stop out with the market with a loss and wait for the market to come back into profit, you don't lose money. That's the only thing that you should be worrying about. Somebody messaged me on Telegram yesterday after messaging me a couple of times over the last 2 or 3 weeks saying he's been using the market reverse alerts EA. He's getting terrible results with it. Why isn't it working like yours? So we got to the bottom of it. He didn't have fake stop loss turned on. So he was basically trading the strategies, the position trading strategies with a stop loss. Got a message yesterday. I'm happy to report that I've made a nice profit over the last couple of weeks. I've used fake stop loss to true, i.e. removed my stops. It turned whatever he was doing with the EA, with my market reverse alerts EA, into profit by removing one setting, the stop loss. Same trades. I don't even know how it's set up. I haven't got a clue what he's using, but it doesn't matter, does it? That proves the fact. It doesn't matter what you use, what you do, how you get in. It just matters what happens after you get in. That's what makes you the money. How you manage the position, which is why in here I come in and go through this every day. I don't go through this much because it's irrelevant, isn't it? This is just risk waiting to become profit. When it becomes profit, I just put it down there. If it becomes too dangerous, i.e., well, not too dangerous, but too uncomfortable, I deal with it. But if it doesn't, I forget about it. This US dollar yen, I've hardly mentioned it because all it's done since I got into the thing is do that. There is nothing to do. It's either going to do that or it's going to do that. If it does that, I'll get out. If it does that, I'll scale in and move this line up further. And then I'll wait. That's it. Why I got into the short doesn't matter. I got into the short initially because of that. If you were using the 70, you would have got in there instead of there. You see the difference between the 70 and the 75? It's that. Doesn't matter. If you were using the 80, you would have got in here. So the difference between the 70 and the 80 is probably what? An ADR? 108 pips. 154. 1.5 ADR is the difference between getting in on the 70 and the 80, which is the difference between 1 or 2 extra trades in your position. But I didn't get in on that. I missed it because it didn't get over the 75. If you use the 70, you were in on that. Good for you. That one I got in. I didn't take that. I did take that, but because that was part of a position. But if I hadn't have had these positions on, I wouldn't have taken that because it didn't go over the 75, but you did. Well done, because you're using the 70. Everybody got in there. You got into a long there on the 70. I didn't. Doesn't matter. Forget about it. Just manage what's going on. AZ, are you using the set files as they are on the website? Oh, you were asking AZ. Sorry, I just thought you were asking me if I was using. I just reread your thing and was like, so I've just done that whole explanation and you weren't even talking to me. That's fine. So I should read. Sorry, I missed when you were discussing ADR reversal strategy. Do you use stop losses? No. I was talking to a few traders, all saying the same thing, using different phraseology. Power of Babel, had to bail. Gave me a headache. Yeah. There is a holy grail. You're working on it. Please give us an update. No. I gave an update yesterday afternoon, and I haven't done anything since then. Watch yesterday afternoon, Peter. It's in development. It's not the holy grail. It's just the same thing, slightly different. Simplified. Thanks, Lee. That answers the set files. Very useful, yeah. I almost wish I'd never put set files out there, but you can't release an EA without some kind of set files. You've got to have something. So the only real differences between the set files are going to be the RSI level or the ADR level for the market condition, whether or not you use automated drawdown control or you do it manually, whether or not you use an automatic exit based on ADR movement or monetary value, or whether you target manually. So those are really there's only three in the whole of the market. This is why I keep saying with the market reversal alerts EA, I'm rebuilding something which is simpler, is because of the amount of inputs. That is literally it. Yeah, this is why everybody gets confused with the thing, because of the amount of inputs in it. Yeah, all of this stuff, it's just 99% irrelevant. The main settings that you will change will be your risk. And I'm simplifying that down. You don't get to choose the distance. Everything's over 1 ADR. How much do you want to risk over 1 ADR? Put it in there. That's it. You don't get to choose how much. Doesn't matter, does it? We're using half an ADR at the moment with 0.2%. So if we're using now 1 ADR, what do you use? 0.1. You just halve it. So 1 ADR, that's it. Everything's risk over 1 ADR. The only other settings you're going to change are on, if you're using my strategies, are H1 or your higher time frame RSI. So what are you trading? H1 or H4 or D1 or W1, whatever you want, and what period you want to use and what level. So these inputs are the only real variables to market condition. Signal is, are the bears taking control? Yes, at the moment we use a market reversal alert. So there's many other ways to determine if the bears are taking control after we've moved up, or the bulls are taking control when we've moved down. So that is the only setting you're going to change. So it's risk, it's RSI, and then it's a decision of how far apart do you want to scale into your trades. Yeah, that's the only thing. Somewhere between half an ADR to 3/4 of an ADR. Does it matter? No, 1 ADR, whatever. You're going to get into more drawdown the lower the number, or less drawdown the higher the number. That affects you. And the only other decisions are, do I want to do drawdown control myself or manually? Yeah. And then how do I want to get out? That's it. There's really only 4 things to the whole position trading methodology and strategy is, how much do you want to risk? What's the condition going to be to get in? How far apart do you want to get in? When do you want to get out of things that go wrong? And when do you want to get out of things that go right? There's 6 decisions you have to make as a position trader. None of them are better than any other. So that's what I'm trying to do, is simplify those 30,000 lines of code. And I think there's 100 odd inputs down to 6 decisions. That's it. That's all that EA is doing. But it's still doing the same thing. If it works, we take it. If it doesn't, we scale in and move our entry. That's it. That's position trading in a nutshell, isn't it? I can understand why it must annoy you when someone says it doesn't work. Oh, I've got stop losses on. Yeah. It doesn't annoy me. It confuses me. But this is the thing that I find. I've honed my responses in Telegram and MQL5 marketplace and everywhere down to very, very simple answers now. Have you watched the bootcamp? Yes. Or with the market reversal at CA, have you watched the video about the EA and read the manual? Yes. Okay. So again, I've got somebody on MQL5 market at the moment constantly contacting me. My EA isn't taking trades. Okay. What are you expecting it to do? I don't know. Have you read the manual? Yes. Those two contradict themselves. Have you read the manual? Yes. So you fully understand the EA and what the strategies are. What are you expecting it to do? I've no idea. If you've read the manual and watched the video and understand what position trading is, you must know what it's got to do. There's some people, there is no answer to that question. I can't help you. You're too thick, is the answer. So sometimes I have to say things like that. If you don't understand what the EA is doing and you've fully read the manual, I have to ask the question, what are you doing with this product? I don't know. Can't help you. You're too thick. Go and work at McDonald's. Sometimes you have to be harsh to be fair, don't you? I don't say it like that, but that's what's going through my head. Seriously, I've put together 25 hours worth of education, which teaches you from to there how to make money. If you don't want to watch the 25 hours, I'm not interested. I can't help you anymore, can I? If you can't put the time in and spend a week of your life learning everything about how I do stuff, and it's very clear and simple, I can't help you any further. So this is why I don't charge for all of the education stuff at all. Yeah, it's all out there. If you can't put the time in, I'm not interested. If you come to me and you've put the time and you've demonstrated capability and you haven't understood something, I'll help. And that's how I was taught by my mentors. It's like, I ask a question. It's like, well, that's covered in there, isn't it? Yeah, but I can't quite remember. If you go and read it, you'll remember, won't you? There was no spoon feeding. That's what he used to call it. He's spoon feed. I'm not spoon feeding you. I'm not spoon feeding anybody. Go and get your own spoon, eat it, then come back if you don't quite like the taste of it. And I'll explain why you should like the taste of it. But I'm not going to do the tasting for you. That's the sort of mentality you've got to have, and you've got to change it. You have to help yourself or you don't get helped. But there are some things, obviously, which are too complicated. You know, some people don't know how to use the strategy. I had somebody the other day say to me, what's the strategy? I said, have you tested it in the strategy tester and make sure that your settings work? What's the strategy tester? Seriously, Google, man. AI. There's everything you need in the universe is on the internet. Just type it in. I shouldn't have to answer what the strategy tester is to people. How do I know you work at McDonald's? Nothing wrong with working at McDonald's. There are people working at McDonald's because they've just left school with 3 A levels, but they haven't quite decided what they want to do yet. No problem. But the people that leave school with 3 A levels that want to become traders and come and find my stuff will never contact me because they've got 3 A levels and an intelligence level that says, okay, there's 25 hours worth of information here that I need to absorb to be able to learn this thing. I'm doing it. The people that work at McDonald's that are like, next, please, who want to become traders, I can't help. There's different levels of human race. Some of them aren't going to make it. No matter how much you tell somebody not to jump off that cliff, some of them will see a butterfly and go. Can't help. Everybody in here knows people like that. Suspected spam. Good one. I watch you every day and I saw a better position, and I don't saw a better position trader like you. It's crazy to see how you managed the drawdown on squeeze markets. Learned a lot from your stream. Cool. Set files very useful. Problem is traders running EAs without taking time to understand the strategy. Yeah, that's exactly the problem. This is why this is my default response is, anybody gets in touch with me with any problem, have you tested it in the strategy tester? No. Go and do that. Oh, I see. The answer is always there. If you open this thing up, right, and you press this button, the answer will be presented because you will be expecting this to do something when a condition is hit. If it doesn't, there's very little that it can cause it not to do what you're expecting it to do. Yeah. So why did that not take a trade? Well, I don't know. Why did it take a trade there? Because it's on a retest or something. But what the answer will always be in here. Look, entry, reversal, retest. Yeah. Why did it not take a trade? Because there was no retest within the conditions of that retest. So as long as you know what you're expecting it to do, you will always be able to find out the answer to what. And this is what the strategy test is really, really, really useful for. Figuring out why stuff's not working or figuring out what is working. People unfortunately want too many 3 easy lessons. Yeah. You two in 3 easy lessons. Yeah. But I've developed a strategy, a course, which is exactly that. Because this thing is 3 easy lessons. When you think about it, where the hell have I put that? All right, this is kind of something new that I've been working on, which I'm putting together, yeah? And I just called it the 3 simple trading rules bootcamp type thing, right? There's 3 zones, Asia, London, and New York. There's 3 outcomes for every single price action candlestick. It's bullish, it's bearish, or it's undecided, yeah? There's 3 constants. It goes up, it goes down, it moves through time. There's 3 essentials. You need an entry, a target, and a backup plan in case it doesn't work. There's 3 strategies, range bound, breakout, and trend. That's it. There's 3 pullback levels on any market structure movement, shallow, medium, and deep. Yeah, based on fibs. There's 3 risk strategies, a stop loss, DCA, what we do, position trading, and hedging. Yeah. There's everything in this market revolves around a rule of 3. It's interesting you say that. You too, in 3 easy lessons. I've been working on exactly that concept, not because of any other reason, that it is simple to teach people. There is only 3 things that can happen. You press that button, it's going to do that or that through there. That's it. Every time a candle closes, it's either a bullish candle, a bearish candle, or an indecision candle. There's only 3 states of the market. The bulls are in control, the bears are in control, or no one's in control. You have no control over it. Accept it. It's just, you know, it moves differently there than there than there. You can teach everything in this industry in 3s. Very, 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 very simple. The one thing that isn't simple is trying to pick the top and the bottom and use a stop loss to determine whether you're right or wrong. That's the only thing that is taught in every other strategy on the planet, which is why none of them work. But all you've got to do is accept the 3 outcomes of everything that is in existence. It's either going to do that, or it's going to break out of it. And that will either be a false breakout or a continued breakout. And if it's a continued breakout, it turns into a trend. We are ranging, we are breaking out, or we are trending. Those are 3 things. The market doesn't do anything else, does it? It's ranging. At the moment, there it was breaking out. It didn't work. You know, it's very, very simple when you look at it. This is trending. High, low, higher, high, lower, higher, low, higher, high, higher, low. What we're expecting next, if we're going to continue trending, a higher high. What's going to happen if we're not? There's nothing else that can happen. Just got to... I think this is the problem with all education out there. Everybody's trying to make everything so complicated. When you just let go of everything and just press the button and wait, it just all works. And accept. It's the acceptance that you're not in control is what everybody struggles with in this industry. When you accept that you're not in control, I have no idea where US dollar yen's going. Couldn't give a monkeys. Doesn't matter to me because I've got what? A backup plan. I've got a target. I've got my entry. And I've got a backup plan. There's only 3 things you need. Yeah, it's either going to go to target or it's not. I've got that covered and I've got that covered. This is where I got in. There's nothing else I can do about it, is there? Why think that putting an order there to make you lose is going to help you in any way, shape or form? If it goes up, you can move this. You don't have to lose 1% of your account every time you get an entry wrong. You're shit at trading. Everybody is, because unless you can see into the future, you're crap. Because majority of your trades are going to be wrong. Because you've placed an order to say, I'm wrong here. Get me out. You can't see into the future. Pointless trying to try, isn't it? You can be lucky, very lucky. I've had many instances in the past using stop losses where I've had 5, 6, 7 trades in a row. And I'm like, I cracked this. And then it took it all away. Just what happens. I think people that find your content when they first start trading won't believe it. You have to go through a couple of years of pain to realize other things don't work. Yeah. But the problem is nobody is willing to accept that you need money. Again, that's the other myth in this industry. I can start with $1,000 and I'll have 100,000 by the end of the year. No, you won't. You need to start with 100,000 and then you'll have 10,000 a month income. If you haven't got the 100 grand or the 50 grand or the 20 grand to start with, sorry, but McDonald's is hiring. You need to learn that bit. Yeah, it's not, you can't start with this. You can start with 5 grand and compound it up over 2 or 3 years. That you can do to a level where you can make an income, but you can't just flick a switch. It's a business. It's a job. If you want to treat it like an extra income or a hobby, any amount of money is absolutely fine. If you want to treat it like a job that pays your bills, you need a capital to start. You can't just do it on 5K. It's not possible to turn 5K into 5K a month. You've got 100% return on your account. You're going to have to risk ridiculous amounts of money. And the first time the market sneezes in the wrong direction, you're dead. Whether you're using a stop loss or not, doesn't matter. Just watched it. Holy Grail EA development update. Nearly fell off my chair laughing. Yeah. Took a bit of struggling to unlearn to win. Yeah. That was the same for me for the last years. Then I realized the content here and I understand how I should see the market and work with it. That's a really good way of saying it. Work with it. Work with the market, not against it. You can't control it. It's like if there's a steam train coming down a hill towards you, you can't stop it. So get on it, wait for the hill to stop, plateau out and go up the other side and then get off. Can't control it. You have to work with the market. The market pays you. The market is your boss. The market decides when you get paid. I asked the market back here if I could get paid on the US dollar yen, please. And the market said, no, not yet. So I said, what about now? Can I get paid now? And it went, nope, not yet. And for the last 8 weeks, I've been waiting for the market to allow me to get paid, to pay me. It hasn't decided to pay me yet. So I've been in this since the 5th of January. And I'm now at the 31st of January and I'm still asking for payment. I can't control this. Market will decide if I get paid in February, or the market might decide that it will pay me in FOMC at 8 o'clock tonight. Because if we're sitting at 200 ADR to the downside, because FOMC have come out and said, oh, you know what? It's February, we're dropping the rates. I get paid. If they come out and say, actually, it's September, we're going to drop the rates, I don't get paid for another month. But I've got to work with this market. This market is moving out of control, and I have to work with the market. I have to scale in and scale out of the movement that it does. I can't control it. It controls me. Lose control. Relax. Use small lot sizes. Get in, get out, and realize how it works. This is why I say in the bootcamp, give it 3 months with 0.01 lots, tiny lots. Give it a month at least, but ideally give it 3 months. Do this, and you will see this green, guaranteed. That will be a green number. You will have never had a green number month after month after month. If you can crack 3 months with green, 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 you're a trader. That's it. All you got to do, isn't it? Be consistent. What's everybody want? Consistent. What's every course out there? I will make you a consistent trader by using a stop loss. No, you won't. That's what everybody wants, isn't it? The only way you can do that is by accepting that you can't control this thing and you've got no idea. You've just got to have a rough idea of when. Rough. Most of the time, you'll be fine. Sometimes you won't. Look at last year. I had some terrible months. I think it was August, wasn't it? No, that was profit. September, made 8.5% loss. And I was sitting in 9% of drawdown. Yeah. You're still going to get these months. Yeah. The market is still going to disagree with you for a long period of time. But if you've got half a brain, you'll be able to identify a likely turning point that you can get out of the positions. All the same thing over and over again. That orange line is drawn on the CAD Swiss there for no other reason than that is where we were expecting it to bounce, because it had bounced a couple of times before. It's just identifying the same things over and over again, and you decide when to get into them. I don't know. It might not have bounced there. What's my backup plan? I had one. I don't know what it was, but I had one. I always got one. Drawdown control has saved me many times. Turned my first entry into my TP in the end. Yeah. Look at my pound yen. You know, this is what it's all about. There's things that you have to do. You have to take high risk trades. That was a stop loss trade. What happened? Got stopped out. Why? Because I told the market if it goes up above the price I got into to stop me out. It did. Because that's what it does most of the time. This one was the same. I had a stop loss up here. This time the market said, all right, we'll pay you this time. Thank you, Mr. Market. Was that my choice or not? Yeah, it's the market's choice to go down. But I had a much more confidence in this than I did here, because it had done that without doing that. And after that, it typically does that. But when it does it is down to the market, not to me. Lose control. Let go. It's a bit like when you're doing a bungee jump. If you've ever done a bungee jump, I did a bungee jump in Australia. No, New Zealand. You're holding on. You cannot let go of that thing. You're holding on, you're holding on, you're holding on, and you're crapping yourself and you're looking down, you're thinking, oh my God, that's deep. And then suddenly when you do let go, it's like, this is all right. But letting go of the stop loss for most people is impossible because they are told. I saw a really good graphic. The other day, which explained stop losses. Matchbox stop loss trading. I don't know. I'll draw it for you, basically. It's a matchbox. You know, like those flip matchboxes. And it had the matches all lined up like this. One of the matches was like that. And the rest of the matches over here were like this. Yeah. This is everybody's mentality and why stop loss is crucial. Yeah. So this was the stop loss one. And all these were normal matches. Yeah. These were not burnt. These were all burnt. The concept is these matches all catch fire. Yeah. That one can't. That's your stop loss. So what does it save? Your account. The concept is that a stop loss stops your entire account disappearing. What nobody sees, the stop loss makes a large proportion of your account disappear. The mentality shift from this being something that saves your account to this being something that burns your account is what I teach. That's all I teach. You're just using the stop loss wrong. You're expecting it not to blow your account, and you're quite right. But what it will do is it will slow down the rate of blow, not blow it up immediately. That's all you're doing, is you're gradually, match by match, account by account, trade by trade, blowing your account. You just think this is the safest way to do it. It's the safest way to blow your money, definitely. What happened there? They didn't lose. There was no stop loss. Why can't people see that match as the solution rather than the problem? That's the mindset shift. Got to be able to do that. I can't. It's on Facebook. Oh, there it is. There you go. I looked at that when it came up on my face, because I obviously get bombarded with, as everybody does, with trading stuff on Facebook. Came up on my Facebook, I was like, oh, God. It was an advert. I don't know what this is. It's obviously been reused many times. An advert for somebody selling a trading course, basically. Yeah, and it basically is always use a stop loss. Be a successful trader. I have to hold myself back from commenting. Quite often what I've done is I've gone delete. I've just ranted everything, and just to get it out of my system, and then I delete it and don't post it, because I don't want these people anywhere near me. But I thought it was a really interesting graphic, because it demonstrates exactly, people are looking at it going, hey, this is why I do this. They don't realize they're just destroying their account, because they think it makes them better in some way or shape or form. I only lost 0.5%. Sorry, what did you lose? 0.5%. Why did you lose? Well, because stop loss got me out. What is a realistic amount of capital to trade with to earn about 3K a month? 30,000. Do the maths. What do I make each month? 5 to 15%. You want to make 10% a month, and 3K is your 10%. What do you need to do with your 3K? Multiply it by 10. 30K. Should be able to get 3K on average, yeah? Not each month. Don't forget, this pays you. You don't pay you. This pays you. If this was my only trading account at the moment, I would have made 8.63. If my mortgage payments and bills are $5,000, I haven't paid the mortgage and my bills this month, but next month I'll make 17. The month after that I'll make 8. The month after that I'll make 25. The month after that I'll make a loss of 7.5. The month after that, yeah. So the months you make a loss, you don't pay yourself. You need to pay yourself. I pay myself usually quarterly. Reason being is it allows your account to compound for 3 months. Then you can withdraw back to where you were, or withdraw what you need. Yeah. I have to buy holidays every now and again, and they come out of an account. So what I do is I tend to run, in my brokerage, I have an account which is spare, which I transfer the money into, and I draw out of that account. So I have what I call a withdrawal account. So this is why you will see in my P&Ls, you will see transfers, not deposits. Yeah, transfers. So I move money around and then withdraw it from an account. Yeah. Because you can't get paid every month. This isn't a job that pays you a salary. It's a bit like being a director of a company. You draw a dividend. You draw a dividend every quarter, every 6 months, every year. Yeah. So what has the business done this quarter? Well, this quarter we've had a screamer. We've made 100 grand. Okay, I'll have a dividend, please, of 80. This quarter, the business hasn't done too well. It's only made 22k. All right, well, I'll just draw out 15. But last quarter, I draw out 80. This quarter, I've drawn out 15. I've drawn out 95 in the last 6 months. You have to look at it over a year. You're not going to make the same amount of money every month. There is no P&L I have which is the same. This is going back over last year. 8, 3, 16, 3, 19, -9, 24, 6, -8.5, same month, 21, 13, 5. Yeah, that's real how it goes. There is no, I'm going to make 5% a month. What do I need to earn 3k a month? Luck, because some months you're not going to. That's real. It's not, it doesn't work like that. Which is why I say again, if you want to go live as a full-time trader, first thing you got to do is at least have 3 months under your belt where you haven't made a loss. Convince yourself you can do this and then repeat that process that made that 3 months profitable. Also, put 3 months worth of mortgage, bills and spending money in the bank. You need that because if it goes wrong for 3 months, you've got to pay the bills, the mortgage and live. Then you're going to go and get a job. Because if it hasn't worked out, you need to go back to work. So you've got to have at least 3 months of living money. So let's say, for example, you need 3k a month, Dougal. You need 9 grand in the bank. You need 30k in your trading account. So before you even get started, you need 3 months of profitable trading on demo or on a small account, and you need 40 grand. That's what you need to get going. Forget prop. You can use prop to make money to put into your account, but you cannot trade prop long term. You will blow your account and go back to square one. You lose your money, you have to restart. That's 2 weeks of trading. You've got to go through your evaluation before you get your money back. And you've got to trade within 5% drawdown, which obviously is not possible. Yeah, so that's what you need. But you need to handle the drawdown, otherwise it will blow up the account. Yeah. I'm the same. They annoy me so much that I spent 10 minutes of my life to write a post, then cool down, and then I press delete. Yeah. I do it all the time. Just one of those things that it's the problem with being somebody that teaches, I think, as well. And I know a lot of other people that teach have the same problem. You want to help everybody, but you just can't, because there are some people that just will not listen, and you say the same thing 100 times. We've had them in the Telegram group. There are names that spring to mind where you just, and everybody would know them if they've been in the Telegram group for any period of time. You just go, just not getting it. You can't help everybody. If I was being paid 5 grand a month by everybody to teach them, I would be the best teacher in the world, but I'm not. Was that GJ short showing on your chart the closes out multiple positions? Yeah. So this probably better to see on the 4-hour chart. So this just about. So this was entry 1, 2, 3, 4, 5, 6. Yeah, so it's there. Either there or there, I'll call it there. There. Yeah, so this was getting into 3.5% of drawdown-ish up here. So I took an aggressive drawdown control position there. It didn't work out, so I took a 0.5% loss on that trade. We pushed up into previous month's high. Took an aggressive drawdown control position there with about half an ADR, 3/4 an ADR stop on it, which was going to be roughly about 0.5%, 0.75% of the account. Then we went for the entire week sideways. These are weekly separators. So we went sideways for a week and then we pushed down. So that position there, I took off. And then I took off, that was 0.23. I reduced it down to 0.13. That was a 0.17, which I reduced down to a 0.07. That was a 0.1, and I closed that completely. So completely removed the lowest position, removed half of that. And banked $700. So I banked about 2% and removed 50% of the entire size of the lower position below the line. Whenever you do drawdown control, everything you do DD control on is always below the line, because when you close out a portion below the line jumps up. When you close out a portion above the line jumps down. We want to bring the average closer to us, not further away. So if you can afford it, always work on the furthest position or the highest position. So this was a 0.17, this was a 0.23, and this was a 0.1. Yeah, so I worked on these two because they were higher than that one. Now this one is lower and this one is the same as that one, and that one is completely gone. Using all the profit from there, 50% of that profit, to do that. I'm still in drawdown, I'm still in the position, and I still think it's going short. Yeah, we've just had a reversal alert on the 4 hour, although it's the most hideous reverse alert, which took over a week to happen because the market's doing its usual thing. News, nothing. What we've got coming up today, news. And tomorrow, news, hopefully. So yeah, that's an aggressive DD. That one was the aggressive DD control. And the target was, as always, propulsion. Market retests propulsion. And they then either rebuy that buy or they get overpowered by sellers at that buy. And then we look at where's the next batch of buyers, 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 massive batch of buyers. This is why these are all grey. Every single propulsion gap from that one there to that one there filled. Yeah, that's what the market does. Moves from propulsion to propulsion, retesting. And then you will get an orphaned one. Why is there an orphaned one? Because the fundamentals change. And instead of coming and retesting that previous one, the fundamentals say, we need to now buy the pound and sell the yen. Okay, off we go. That will never get tested. That is an orphaned propulsion gap. It's not yet. We don't know what's going on. But if the fundamentals, after we start going like that, the Bank of England suddenly turn around and go, actually, we're going to put interest rates up, we're never getting back there. At some point in the future, we probably will. Next year or something. I don't know. But 99% of the time, propulsion gets filled because the market retests previous levels it's bought and sold from. That's why we get equilibrium, what we call balance in the market. For every buyer, there's got to be a seller. There was more buyers than sellers there. We need balance. Or someone's got to lose money. Banks don't like losing money. Don't forget, the banks are playing the long game, quarterly. This is October to January. It's a quarter. Yeah, the banks don't need to get back here in a week. They can get back there next month. This is what COT is all about, which is why the COT is on the website, not on that page. Long-term commitment of traders. Which way are the banks going? Yeah, it's all long-term. which is why we try to look at 1,500 candles worth on the hourly chart. You're looking at roughly a quarterly movement there. Where's the propulsion gaps? Peter, I recommend if somebody starts position trading to have an easy job along with trading. I do Uber so I can pick the times and the money to pay the bills. Yeah, perfect. Or most of the traders I know that are profitable, and I don't know many, but most of the traders that I know are profitable have worked for themselves in some shape or form. They haven't had a 9 to 5 because they've either been directors of their own companies, they've been self-employed, like I was, web designers, that sort of thing, where you are sitting in front of a computer all day long. You can have a chart open all day long. You can trade all day long and watch stuff all day long in between doing your job. Or you've got a job which is flexible, where you can work shifts and then spend a long time in front of a computer. Yeah, this requires time. You can't do a course and that's it, I'm done. Like I keep saying, it's like brain surgery or a pilot. It takes hundreds of thousands of pounds of education and years to learn it. When you've learned it, you do it. This is no different. Yeah. Politicians get paid 100 grand. Pilots get paid 100 grand. Some of them. Surgeons get paid 100 grand. Yeah. What have they all got in common? Somewhere between 5 to 10 years of education and hundreds of thousands of dollars in it. Why do you think you can become a 6-figure-a-year trader after watching a 10-hour bootcamp? Still got to go and do it. It's going to take you 3 months of mucking about, getting it wrong, to realize, there's the light bulb. That's why. That's why he said I shouldn't get overexposed. Because the US dollar squeezed me for 3 months and blew the account. That's what exposure is all about. You may have got it or not got it, but the bits you don't get, you will learn by doing. You've got to do 10,000 hours in front of the charts, whether it be in front of a strategy tester or live charts. You need to have this thing burnt into your retinas. No matter what you believe, whether you believe me or not. If you don't believe me, I know what you'll be doing. System hopping. Where have you just come from? Another system. What's one of my videos about? System hopping. Yeah, you know you're doing it. It's the conscious unconscious thing. Yeah, it's this. The system hopping stage is this bit. It's the conscious incompetence. I tried a system, it didn't work. I tried another system, it didn't work. I tried another system, it didn't work. What are you? You know you're trying systems. You know they are not working. What does it make you? Incompetent. The eureka moment. I'm going to try this system, and I know it's going to have a losing month and a winning month. And what am I now? A break even. Aha! I need to stop system hopping. That's usually the eureka moment. None of it works. How does it work? The eureka moment. That's usually what people find in the bootcamp. Then they go, I've got it, crack it. Yeah, let's ramp up the volume and pop. Learned that bit from the bootcamp. Now I understand it. Autopilot. That has got to be gone through. You cannot skip this. This usually involves 1, 2, or 3 blown accounts, which is why it's good to do it on demo or with $1,000. Because if you lose $3,000 walking on water, that's your education paid for. If you start with 15 grand, 20 grand walking on water, your education's more expensive than if you start with $1,000. You are going to blow accounts. But if you follow the bootcamp to the letter, you won't. But you won't, because you will believe there's a different way, because you've been brainwashed by 1,000 courses, and you'll go, that would work better if I use that bit. No, it won't. Believe me, I've tried it. I've tried it all. Have time to watch the streams, yes. Key thing. There's 77 people in here. It's usually the same amount of people all the time. It's usually the same people every day. Those are the people, you people, are the ones that are going to make it, because you are consistently focusing on one thing. That will work. because you are focusing on one thing. As soon as you system hop, people do it all the time. I see names disappear. There's one guy that comes in the US session. He's at college. He was with me in my Zoom sessions, which is 3 years ago. Every now and again, he pops up in the US session and he says something to me and it triggers me because he says something about some system he's found. And I'm like, you found me 3 years ago. I told you not to system hop. You're back 3 years later. Why are you back? Because you've spent 3 years not finding the Holy Grail. Do the bootcamp again. I always say it, do the bootcamp again. Watch it again. When that eureka moment clicks, you'll stop system hopping and you'll suddenly do it. It's the same names I see cropping up, which is good because they're dedicated. You're coming back. Most people have gone by now. You usually give up. 3 years is the average education period in trading before you give up. You don't find it in 3 years. It took me nearly a decade. What did you use the EA? Did you use the EA drawdown control or manual? I do everything manual. Because it's the way I've always done it. Again, automatic drawdown control was added into the EA as somebody asked for it. It's not something I particularly like because the problem with... So look at this pound yen. Yeah. So since the initial entry here, we've moved 713 pips. ADR on this is 128. So roughly 260, 520, call it 6 ADR, something like that. All right. We've moved 6 ADR. If you had your EA set at 0.75, or let's make it easy, you have your EA set at 1 for drawdown control, and you remove 30% of the trade every 1 ADR against you. What you've done on that one is you've done drawdown control 6 times. You've scaled out, scaled out, scaled out, scaled out, scaled out. All that's been taken in loss. That one, you've scaled out 4 or 5 times. This one, you've scaled out 3 or 4, 3 or 4, a couple of times. Yeah, so you've taken all that loss, right? But here, I was in 3.5% of drawdown. I was personally comfortable with that because the month was going well and I'm expecting the interest rates to come down. So I didn't want to take losses along the way because I was expecting it to come down. If it gets to the point where I'm like, crap, this doesn't look like it's coming down, I've got the aggressive drawdown control option, which is what I prefer to use, because if you've moved that far and you haven't pulled back on it, it's highly likely you're not going to get further, because the banks cannot continue a move for 2 or 3 months in one direction without having to take profit. Remember the quarterly reporting periods. Shareholders and clients need to see results. You can't go one way without coming back, because if you go one way, you're not making money. You're adding to your profit, but you're not returning profit. They have to return a profit, which is why you'll very rarely ever see a squeeze lasting more than 3 months. And then it's way back the other way, fast. Yeah. So if you take losses all along that way, full well knowing that that's coming down, all you're doing is you're taking losses. So it's equivalent to using a stop loss, but in a very, 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 very small way. Death by 1,000 cuts, if you like, using automatic drawdown control. So if you're going to use automatic drawdown control, I would recommend using probably 1.5 ADR. Sorry, 1.5 ADR. Yeah. Because the average squeeze, and I wouldn't even class this really as a squeeze. This is quite a big move because we had 2 days where we put in like 200 ADR. So, you know, half of this entire move happened in 2 days. The rest of it's all been mucking about. Sideways, most of it. So 1.5 ADR, maybe take off 1/3 or 1/2 of the position. So, but yeah, up to you though. If you're just starting out, doing automatic drawdown control is probably good because it keeps your drawdown smaller, but you will find it more difficult to make money. No right or wrong. Valentin, let me just ban you. 1 sec. Wanted commercial content or spam. Hey, there's a new EA seller. Bye-bye. Haven't had anybody spamming in here for a while, have we? I'll get rid of that. How long shall I put him in a timeout for? 24 hours. You can see that from my growth curve, the first month. Yeah, so this is AZ's. Yeah. You're going to get, this is an absolutely healthy P&L. Yeah. A P&L should have losses in it. My P&Ls have losses in it. You look at my 12-month P&L, you saw I just went through all the screenshots, yeah? There was 2 losing months in there. There were months that went like that. There were months that went like that. Then there were months that went like that. Not that much, but, you know, a bit. And then there's months sideways. Then there's months that are little ones. Yeah, that's healthy. If it was like that all the way, I'd be worried because I would be thinking, Christ, he must be sitting on 25% or 30% of drawdown. He's just not closing any loss. You have to take losses. All we're doing is we're not taking them because the market's moved. We're taking them because we are uncomfortable with the amount the market has moved against us. We're not taking it because the market's gone up. We know the market goes up and it goes down. There's no point in losing money just because the market's moved. It's good. It's an opportunity. What broker he uses? I use Forex. If you go to the recommendations page on my website, there is links there to everything that I use and recommend, which isn't a lot, third-party wise. I'm on my 8th year, last 8 months with you. I have to admit, I bought your market reverse alerts indicator about 5 years ago. I didn't make it 5 years ago. Three or four? Oh dear, when did I make that? March 2020. Look at that. COVID. Oh yeah, look, as COVID kicked off. That was shock. Yeah, as COVID kicked off, look, March 2020, so 4 years ago. When I first released it. That was about a year, year and a half-ish, I guess, maybe 2 years actually, into being profitable. I decided to start making tools to make life easier. This is the thing. When you get, everybody wants to get into this job. Everybody wants to be a trader. Because it's cool, it's dynamic, it's fun, you're going to make loads of money. When you actually get into it, all you want to do is automate as much of it as possible because it's so boring. Yeah, it sounds exciting. It's partly one of the reasons I do the streams, is to keep myself entertained. Otherwise, I sit here in my little office going, candlesticks moved down for an hour, moved up for an hour, moved down for an hour. What do you think I would have been doing for the last 8 weeks on the pound yen? And I do that a lot in my office as well, because there's nothing to do. So I started to build indicators to make my life easier. Rather than manually identifying and drawing on the chart, I thought, well, if I can automate it by building an indicator to show me the market structure, it just means I can flick through the charts quicker. The whole purpose of the market reverse alerts indicator initially was so that I could do this. Every few hours, oh, there's an entry there. Look, that's possibly retesting. That was the purpose. That was why I built this. Not because I couldn't do it manually, because I didn't want to take 40 minutes to do something I could literally get nailed by having something automatically do the drawing for me. That's the whole purpose I built it. And then I shared it with some friends and they were like, that's amazing. So then I put it on the marketplace and everyone went, wow. I was like, why are you so excited? This isn't just normal. And then I built all the other stuff. And then I built the EA so that I didn't have to do any work. Because it's boring. Much easier to have the EA do everything. And all I have to do then is just look at this thing. So I built this because I thought, well, how can I figure out from this thing what the hell is going on? How much drawdown have I got on the US dollar yen? Hang on a minute. Euro Swiss. Be on my calculator. Okay. Well, I need to close out half of that. So what should I close out for drawdown? Pound yen. How much should I close out? That was a ball ache. So I built the trade manager dashboard so I could just go, excellent. I've just made 2.5%. What should I need to concentrate on? Euro yen, because that's in high drawdown. I can close out any of the top 3 positions. 2 seconds. 10 minutes with a calculator and the MT4 tools. That's why I built that. And everyone went, oh, that's amazing. That's why I started selling stuff, because it was useful. But then with selling stuff or giving people stuff, which is what I did initially with some of my stuff, became I'm a support agent and I'm not being paid for it. So the whole idea of selling the indicators was to pay for the time that I spend helping people do the indicators, use the indicators, basically. But that's how it all came about. And then I thought, right, well, I'll teach people need to know how to use it. So I'll build a video about how to use it. And then it was like, well, there's a million ways you can use it, but this is how I use it. And that's where the bootcamp came from. And I originally charged $50 for the bootcamp. And then on day 2 of it being released, somebody copied it and put it up on the internet for free. So, and they started selling it in the Telegram group for less than $50. So I went, screw you, I'll give it away for free. Now try making money out of me, Mr. Scammer. And now obviously they found other ways to do it, but that's where it all came from. Anyway, I don't know why I went onto that rant. I thought it was longer than that. Oh yeah. Yeah, no, it was only 4 years ago. I released it in March. Thanks for subscribing, Ornagba. Think about that one. February 21. Yeah. Sounds about right. But I don't sell many indicators. You know, this is the thing. I don't sell many. The main people I sell to are the people that are following the bootcamp. The reason it's only got a 4.1 star rating on the marketplace is because the vast majority of the people want to use one of those with it. And they realize that it is as accurate as everything else in the world, 50%. They're looking for something that is going to help them make money. Yes, it will, but don't do that with it. Get rid of that and take that. And if that doesn't work, take the next one. It will work. That's where the bootcamp came from, was trying to educate people how to use it. Because all I was getting was it repaints. It does repaint, yeah, because market structure changes. What do you want me to do? Leave the old market structure in place? What's the point in that? Yeah, but if it pushes down, the signal disappears. Yeah, because the market structure is no longer long. You don't understand market structure. Leave a negative review for you. All right, well, I can't help you. Go to McDonald's. I hope there's nobody. Is anybody really working McDonald's in here? I have no problem with McDonald's. It's just that obviously half the people, when you go to McDonald's, what do you want? Like a Big Mac meal, please. What size? Now they've got the terminals, so you don't even have to talk to anybody. Even better. I have no problem with McDonald's or anybody. I used to work in McDonald's. I have no problem with it. This is partly why I know some of the people in McDonald's are like that, because I worked with them years ago, long time ago. Naughties. Will the trade manager and other indicators still be relevant when you publish your new EA? Yeah, if you want to use them. Yeah. The new EA, I mean, yes. I mean, out of all the indicators that you see on my chart here, propulsion gaps, support and resistance, never going anywhere. RSI, not going anywhere. ADR, not going anywhere. Market reversal alerts, less important. Because since I've been using the EA, which is 2 years now, I've identified many, you'll have seen me in the live room do it as well. I've identified many instances where we've moved 3/4 of an ADR away, and we've done it so fast that the reversal alert has been there. And then we come down and we sit there for 3 days. And I'm like, we didn't get a break in structure. Fair enough. So it's now back to very close to where the previous entry was. But if I'd have just taken a price action entry there, I'd have been out of the trade. Yeah. So this is what I want to do. So you'll have seen me many times in here go, we're not going to get a reversal alert on this. I'm taking a manual, and I'll take a manual trade. This one has buttons, so I can take the manual trade and it gets included in the position that the EA manages. So it's kind of an enhancement on it, but this isn't the end. This is not the be all and end all. This, as I said, the reason I built this was to easily identify market structure, to help me speed up the process of manually drawing boxes, which is what I was doing. I would manually draw a box. So this indicator wouldn't be there. So every time we made a new low, I would draw a box on the chart. I would then come back to the chart 3 hours later. If we made another low, I would pick the box up and move the box down on every chart. You see how long it takes to actually trade all instruments? This speeded up my entire analytics process or analysis process by hours, literally hours a day. I suddenly, wow, I've done it. I've done my whole analysis in 20 minutes. Normally it would take some charts. I would sit there for 15 minutes looking at it and changing market structure and then reanalyzing it and then go up to a higher time frame and realizing that actually I should have that there. Don't need it anymore. Yeah. But the problem with the market reversal alerts indicator, as everything has a problem, is things like this. That is the hourly entry. Look at what you've missed. 74 pips. Half an ADR is 64. So the market reversal alerts indicator gives you a confirmation after the sellers are back in control of the market. With position trading, sometimes I don't want to wait for them to be fully back in control of the market. I can see that will get us in. And you can use things like moving average crosses. You can use market reversal alerts, or you could use a candlestick pattern, or you could just press the button. Do it yourself. Yeah. So it's kind of an evolution, but it will work on full auto, but it's not for full auto. It's for position trading. It's a tool, more like a utility, but it has all the automation you need as well. So it doesn't become irrelevant. I will still be using market structure. It's written on my t-shirt, the market structure trade. I am still trading market structure. However, there are times where you don't want to get in on market structure. You want to get in before market structure because you're going to miss amount of movement that would get you out. Yeah, don't forget, our job as position traders is to try and keep our average price within an ADR, so that when we get the ADR moves, we get out of the positions. So Euro Swiss is a good example to use. Yeah, average is here. ADR is there. If we get an ADR hit today, I get out. I can. But as long as the average is there. Now, if you look at this here, this weekly low, which we bounced off with a hammer, which turned into a 3-bar reversal, the best entry on this would be to identify the 3-bar reversal and enter the market. Buy. That was the reversal alert. That's where I would have got in. The reversal alert hadn't triggered. What did I manage to save myself there? 10 pips. Move that down 10 pips. That was an exit yesterday. Reverse alert, put the average there. I put the average here. I exited yesterday. Yeah. So it's those tiny differences when you're using ADR. The difference between half an ADR reverse alert and a quarter of an ADR reverse alert is a quarter of an ADR on your average. Quarter of an ADR on your average, when the market moves half an ADR up, can get you out rather than needing a full ADR movement. Yeah. So I think there's an argument for not using this. And like I say, in position trading, it's not about how I teach in the bootcamp. You don't have to use this. You don't have to use this. You could use a Bollinger Band, a moving average cross, a CCI, a MACD, whatever you want. The concept is you scale in and move your price as market corrects itself. Yeah. The entry method is less important than the distance between the positions. That is key. If you get in too fast, too hard, you're going to too much drawdown too quick, and you will get into trouble fast. So the distance is important. How you enter is less important once that distance is achieved. There's many times, I think the pound yen is actually one of them, where I've got entries which are more than an ADR apart. That's 123. Maybe it wasn't that. Yeah, so these two entries here, look, that's 136 pips. ADR is 108. So that's about 1 1/4 ADR between those two cells. As price pushed up here, yeah, 3/4 of an ADR is 50, 75-ish. So around about where the average line is. Yeah. In there was a signal to go short. I can tell because there's a whacking great wick. So on the lower time frame, you would have had a big push down, which would have taken you below a trigger moving average, 9, 5, anything you want to use. So you would have had another position in there. Then it would have pushed up. You wouldn't have got one there because it's too close. Then you would have got another one there. So now your entries are there, there, and there. Closer together, meaning that average would be closer to price now. Drawdown would be very, very little difference. It wouldn't have been much difference in the drawdown, but the average would have been higher because the entries would have been closer to the 3/4 ADR rather than having to wait 1 1/4 ADR. That's half an ADR difference. Half an ADR is the difference between being there and being there. That being a break even or not. That being a profit rather than a break even. Yeah. So all that the new EA is doing is, this is why it's not called the Market Reverse Alert CA version 2, or I'm not updating the Market Reverse Alert CA because that works on market structure reversal only. This is position trading. So there's a million ways you can position trade, including a buy and a sell button to start your position off. So if you want to use Bollinger Bands to enter with a MACD, it won't have triggers in it to automatically get you in on that MACD extension Bollinger Band cross. Yeah, MACD condition, Bollinger Band re-entry signal. However, it won't automate that for you, but you can press the sell button when you see that and let the EA position trade that for you. So this is the key, is the buttons. That button press is whatever market condition, whatever signal you want to use personally. The button is you having that signal trigger. I'm not going to put, before you ask, every indicator under the sun in it, so that if you trade a MACD or a CCI, it can auto trade it for you. And if you use a Bollinger Band or a parabolic SAR cross or whatever, it will trade it for you. It's not for you, it's for me. If I build all of that into it, it becomes the Market Reverse Alert CA. It has 30,000 lines of code and it takes a month to try to test M5. Yeah, the whole idea is I want this to be fast, adaptable, usable, not the holy grail. What's the best set file? Press the button, but I don't know when to press it. Watch the bootcamp. I can't be asked. Go to McDonald's. That's it. That's what it is. Don't go to McDonald's, Brian says. I don't with end users working on Wall Street. Purely insane. Yeah, most of them on coke, probably. You said they call them chefs. I dare you to go into Mackey's drive-through in the morning and say, "Morning, chef." Yeah, but the people at the window aren't the chefs. But you're multitasking. That's the beauty of McDonald's. You learn many, 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 many useful talents you'll use in your future. Customer abuse. You got the app. They will deliver your car. You don't even need to go into McDonald's. I know. Yeah. We've had hangover McDonald's. I wake up in the morning every now and again, like we've been out on a big night out with friends or whatever. And I look at the wife and I'm like, McDonald's? Yeah. Back to sleep for 10 minutes. Ding, ding. Up. Brilliant. I don't have McDonald's very often. It's one of those like once every 2 or 3 months treat type things where we're like, let's get some of that crap in us. Most important tool for position trading is the Trade Manager dashboard. Yes, exactly. This is all you need. What can I bank when? What do I need to worry about? This is your alert system. Once you're in a trade, this is your alert system. I need to be alerted when it's not quite going the way I want it to, and I need to be alerted when it's going the way I want it to. That's it. I haven't got control over this thing, so that thing I have got control over. What to do when. That's it. This is why this is here. This is why you see this all the time. Every live stream, there is not one live stream where I am sitting without that thing there. It's the Holy Grail. Look at that. This was in the middle of the squeeze. Look at my face. 23.75% of drawdown. 9.47% loss. This is the worst month I've ever had. June 2023. Do not want to go back there. But look at this. Look at this. This is a great example. 23.75% of drawdown in June with a 9% loss. Skip to July. No drawdown, 24% gain. No drawdown. June, July. June, July. Normal. It happens. You are going to experience it. Although 23% was the highest I've ever had. Ever. When this thing gets to 15%, there's something really wrong. When it gets to 23%, it was the pound US dollar, basically. And oil. It was that long. That was June. I got out of it in July. No, sorry, June. Hang on. No, it wasn't that. What was it in June? It was oil, wasn't it? Isn't that when I said I'm not trading oil anymore? I can't remember. Hence, I don't trade oil anymore. I can't remember what it was. It was something. We had 2 squeezes at the same time. Doesn't happen very often. And that should scare you. You should be worried about that. But don't overly worry about it. Yeah. What's the worst case scenario? That's the worst month I've ever had in 7 years odd doing this. And that 24% was only a quarter of my available risk on the table at 1 month of the year. In the grand scheme of things, I was only risking a quarter of my account for a month. And I got out of it. If it had pushed further, I would have got into more drawdown. But by the time it had pushed further, it had been parabolic for 3 months. That's why July was 25% profit, because I rode the wave and then the wave paid me. The market paid me. Didn't get paid in June, did pay in July. And this is why you get this, look, 2.52%, 0.28, 0.16, 0.46. You're going to get these big days. We had one on this one, didn't we? Which account was it? Must have been last week. We banked 6% last week on ADR reversals, I think it was, wasn't it? Because everything just went boom at the same time. You bank everything. because you're sitting in everything waiting for the bank. You're waiting for the banks. When the banks move, everything moves, doesn't it? Most important tool for position trading, sped up, not speeded up. I don't know what that means. Where's the coffee, MST mugs? No. I did have merch. My merch is gone. I don't know why. I had a merch store. It's vanished. I don't know where it's gone. I did have a merch store. But it's gone. I don't know why it's gone. It's gone somewhere. It was here. But anyway. You don't need merch. You can make your own merch. I'll give you my logo if you want, and you can go make your own merch. Why do you prefer using 9 moving average instead of Fibonacci number 8? No idea. What? No, first of all, never heard of Fibonacci number 8. Secondly, one of them is a moving average. One of them is a Fibonacci. They're totally different indicators. Thirdly, why? I don't know. Honest answer. Does it matter? Why? I'll flip the question. Why do you prefer using Fibonacci number 8 and not the 9 moving average? And what's the difference? I think MacD's is the 5th largest employer in the world. Yeah. Good for them. Everybody's got to work. I'm not by any means saying that everybody in McDonald's is stupid. I'm just saying it's easy to get a job there. Yeah. Very intelligent people work in McDonald's. I worked in McDonald's, like I said, right? I class myself as fairly intelligent. Managed to crack this thing for a start. You need a brain. There's nothing wrong with going there. There's so many students in there. What are all those students doing? A-levels and degrees. They're bloody clever. They just need a job. Nothing wrong with that. Need managers. Managers need brains. I have no problem with it. All I'm saying is, if you think you can earn a Lamborghini within 3 months, that's probably where you should be working and getting an education in life, not anything else. This is also what I found out when I watch your streams. Don't be scared and wait for the take profit moves. Yeah. This is why I have all the streams. This is why the streams are left there and not touched. Yeah, because, and I get this from people, it's like, show me your P&L. Show me your last 2 years worth of trading. Show me your Trade Explorer. Where's your signal? Why have you not got a signal for your EA? It means it doesn't work. You haven't got a signal. If you had a signal, it would work. Basically. I always point them here and go, right, there you go. There is me using all of my products on a daily basis for the last 2 years. Yeah, if you want proof it works, go through all of those videos. Can't be asked, go and work in McDonald's. Same response. If you can't put the time in, if you can't download a product, if you can't do this education yourself, and you haven't got the enthusiasm to go and do any work, you are not going to make it. You have to experience this market. This is me using the product over and over and over and over and over again every day. This is why I leave this up there. If you want me to put a Trade Explorer up, which shows you every trade, how's that going to help you? Yeah. I can give you a spreadsheet with every trade ever taken. I can make I don't know how to do it, but you can make servers, and I could pump false information into a server and feed that up onto a Trade Explorer for you. Many signal services out there that are very clever that know what they're doing. Yeah. Doesn't help you. Do it yourself. You've got to do it. Do it. Go out and learn it. Sometimes when I hear you read out a question, I can feel a rant coming. Yes. Nothing else to do. I've got a lot of programming to do, which means I need to get on. Fibonacci numbers 1, 2, 3, 5, 8, 13, 21, da 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 da. Yeah. What do they mean? What's this mean? Look. Okay, so I've got a 23.6, a 38.2, a 50, a 61.8, and a 71.9. What do they mean? How do they help you? What do I use there? Which one is the one to use? What's the 8 Fibonacci help you with? How does it help? What does it do? What does it tell you to do? Why not the 9? Why not the 15? Why not the 6? And again, flip it back on me. Why use the 9 moving average? All right, I use the 7. What difference is it going to make to my trading? None. I'm still going to be profitable. It's just that I'll get a different entry on the 7 to the 9. But if I use the 12, I'll get an entry there. Yeah. Which one's right? Relevant. Okay. Now I'm getting now AZ should be feeling a rant coming on. You've mentioned magic. There is no magic in trading. Yeah. I think you need to go to John Wick's School of Trading. He will teach you all about magic. Magic numbers are accepted as Fibonacci calculation numbers, not the Fibonacci correction tool. Alan Bay, you really haven't watched the bootcamp yet, have you? I've seen your name in here a few days now. You're listening to me. You're still here. That's a good sign. By God. Magic. Why not focus on moon cycles? They're probably as good as magic numbers in Fibonacci. Moving averages do not use Fibonacci. Moving averages are the average price over the last X bars. So a 9 moving average on the 1 hour time frame is the average price plotted for the last 9 candlesticks on the hourly. The 9 moving average on the 15-minute time frame is the average price of the last 9 candles on the 15-minute time frame. Fibonacci and moving averages have no correlation whatsoever. Watch the bootcamp. I watched the bootcamp and every video of yours. I've been following you for 3 years. Then why are you talking about Fibonacci magic numbers? Why aren't you trading profitably? I'm confused.com. Poking the bear. I don't really want to be called a bear. A bear means something else, doesn't it? Yeah, in certain circles. I don't want to be a bear. Not a bear. Is the ADR indicator and dashboard a good place to start with your strategy? No, the bootcamp. Do this. Click that link. Position Trading Handbook. Download this. Follow this to the end. It shows you what to read, what to watch, what order. Download that PDF, read it. It takes you 10 minutes. Then after you've done that, watch this video. It takes you 10 minutes. After that, watch this video. It takes you 8 minutes. After that, watch that video and that video, which tells you about market structure and about multi-time frame analysis. Then watch this about what incorporates a system. Watch what reversal patterns are and watch this video there. Watch this about ADR so you understand what ADR is. And then watch this video, which is 25 minutes long. You've done 2.5 hours, right? The next part is the bootcamp. Without this, yeah, you will not understand why I do this. Because all of that content that I've just taken you through educates you on everything that you've got wrong, why you're system hopping, why you've got no control, the steps that you have to go through as a trader before you understand what trading is, how the market moves, why the market moves, what average daily range is and why you should never use pips and you should always measure the average daily range of an instrument. All of that needs to be known. And then when you understand that, this will put the final nail in the coffin and go, stop using a stop loss, because all of that stuff is irrelevant. This is what you need to do. It's all relevant in the fact that you need to know it, but it's irrelevant in the fact that it has no control over what happens in the market. And this is how you make money. Yeah. You've got to do it in that order, ideally, because if you watch Bootcamp day one and you don't know what ADR is, or you watch Bootcamp day one and you don't accept that you are system hopping, you watch Bootcamp day one and you don't realize you have gone through competence, conscious incompetence, and you have hopped up to walking on water and been knocked back. If you don't understand all of that, you won't understand why you shouldn't use a stop loss. It's the core of everything. And this is brilliant. But without that, you'll really go, well, that's just pointless. I'm just going to blow my account. You'll realize you won't blow your account because you'll understand how the market moves, why the market moves, what mean reversion is. So many people watch the bootcamp and I've had questions. Is this a trend strategy? You don't even know what the difference between mean reversion and trend is. Got to know all of this before you do this. Yeah. And then you come in the live room and you see me do it all. That's all you need. But you've got to start there, start here. This is why I'd put this together. It's a bit like ICT stuff. Yeah. If anybody's been through ICT stuff, the main problem everybody has with it is there's 10,000 videos out there, all pretty much saying the same thing, but some of it is in here, some of it's there, some of it's there. And you need to, none of it makes any sense. This is why people get lost in ICT. None of it makes any sense on its own. It has to be put together into a package for you to understand any of it. And even then, it's so overcomplicated, you still can't. And, you know, this is where the difference between the McDonald's workers and the McDonald's workers are. Those McDonald's workers need a degree to understand ICT. Those McDonald's workers never going to have a chance of understanding ITT. It's too complicated. My stuff's very similar. There's a certain stuff you need to have a background. This is not for, I've decided I want to go into trading. What's a candlestick? Not going to help you at all. You've got to have some experience before you do the bootcamp. And that is the stuff that I show you before the bootcamp is the stuff that I think is the important stuff you have to know before you do the bootcamp. Other than that, it's down to you to execute it and watch it many times. It's 10 hours, 11 hours long, roughly. Spend 30 hours of your life watching it 3 times. It's like a film. I watched again, I'll give you an example. I watched The Quiet Place Part 2 again with my kids this week. And there's a part in The Quiet Place Part 2, right at the beginning, where Cillian Murphy is talking to the deaf girl. And he says, what is the sign language for dive? Because they're watching a baseball mat and they're saying, dive, dive. And she goes like that. Towards the end of the film, he uses that signal to tell her to do something which is important and saves both of their lives. Never picked that up. I've watched A Quiet Place Part 2 multiple times. But that time I watched it this week, I picked something new up. Same with the bootcamp. You are not going to absorb it all in one go. You are not going to absorb it all in the second go. It's going to take multiple runs and you're going to suddenly go, oh, that bit that I was struggling with, I've got it. And that could be your eureka moment on the steps. You missed it because you only watched it once. Go and watch it again. It's important. You do that with everything. Watch it once a month if you want to. Just batter it in your brain with a hammer. No, don't do that. But you know what I mean. Is the ADR indicator? Yeah, so that's that question. Tarot cards are better, Franco. Yep, true. The cards are better. I'm using H1M5 mean reversion. I was just wondering why the new EA uses 9. Doesn't use 9. I haven't said it uses 9. I've used 9 as an example of how you could get in. You could use a 5, a 20, a 21. It doesn't use anything. It uses a moving average. Price has been going up. What does it do when it comes down? Crosses through a moving average. Which one? I don't care. You choose. I'm not going to give you one. It will come as a default with one, but I don't care what it is. Use whatever you want. You tell me. Do you want me to use a 5, an 8, or a 9, or 11? You tell me, and I'll use it. That will be the default because I don't care. It doesn't matter. It doesn't make any difference. If you put a 5, a 9, an 11, and a 15 on your chart, yeah, you will either get in there, or there. On the grand scheme of things, what difference does that make? Doesn't make any difference. Use whatever you want. Press the button. Yeah, the button doesn't have to have anything, right? If you have a button on the chart that says sell, right? When price pushes up to there, and I have a candlestick that goes like that, I can press that button, and that's my entry. The moving average for the 5, the 9, and the 11 could be there. I get in there. Is that a good entry or not? Let's see what happens in the next 10 candlesticks. Because right there, I have no idea if it's better to use a 5, a 9, 11, or the button. What I do know is we're at a resistance and there's a 50-50 shot. It might bounce from there. Doesn't matter. That's what I'm trying to say. And I try to say every day in here. It doesn't matter what you use. It's irrelevant. It's how you manage the position. That is important. Not the entry method. Yes, there are some that are better than others. Yeah, it's not good to use a 50 moving average for a short entry. Yeah, because it's already moved by the time you enter. That was where you got in, or on the reversal alert, or on the 15 MA, not on the 50. So yeah, there are some that are better than others, obviously. Should be obvious. Or an 8 moving average, an 8 Fibonacci. I haven't even got an 8 Fibonacci, but go the other way, wouldn't I? So where's that then? Doesn't even work. Oh, it'd be 0.8, wouldn't it? That's down there. I can't even make a 0. I can't. This is how difficult it is to use an 8. I can't even make it. What should that be then? 0.08. There we go. So there's your 8. So let's say we double top. As soon as it crosses the 8 Fibonacci, go short. Use that if you want. What I would do though, if you want to use my EA, is I would probably stick that on a chart and then put some moving averages on there and see which one closest matches that. I think you'll find it's probably the 5 or the 3 because you're going to be looking at the average of the last 3 to 5 candles. So it'd be somewhere around there. In this case would be the 5. Very tight. You get a lot of false signals, like every instrument. Any instrument you make super sensitive, and with moving averages, the lower the number, the more sensitive the movement. You will find it gives you more and more false signals. The difference between the 21, the 7, and the 14 is massive. The 7 is super sensitive. The 21 is not. So same with moving averages. And obviously your Fibonacci levels. The 8 is tighter than the 23. Which is best? Depends whether it crosses the 8 and pumps or whether it crosses the 8 and dumps. If it crosses the 8 and dumps, the 8 is better than the 23. If it crosses the 8 and then pumps, the 23 is better because you wouldn't have signaled to trade. What has determined which is the best there? Market movement. What have you got no control over? Market movement. Why does that not matter? It doesn't. Anyway, I've got to get on. I said I was going literally about 2 hours ago and I've been waffling. So I'll shut up now. There's nothing more to bank anywhere at the moment. So this afternoon, I'll be back at 2:20. Again, I'm not going to trade the US indices. It sounds like I've missed a massive FTSE move this morning. Anyway, Nothing we can do about that. So GDP has not come out yet. So we're still waiting on the German numbers. Okay, we've had Bavaria and Saxony and Rhine announced. So we're at 0.2, 2.9. Sorry, so year on year, month on month, year on year. So we are down in Bavaria. We are up in, we are down in Saxony. And we are down in the Rhine. So it's going to be negative CPI. So the euro should be coming down. They haven't done anything with it yet. So it's looking like CPI will be dropping, which is good for interest rate reduction, which is obviously dropping the euro. So it's rallying at the moment against the pound. That's probably the pound dropping, I'd imagine. Pound's had a little bit of a down, but yeah, so it looks like we probably get a negative move maybe on the euro, but whether or not they do that before we get all of this, or whether they wait until till FOMC, we'll have to wait and see. So again, normally we do this on the morning, and then we do that once we get the figure in. So we'll have to wait until later, but we'll see. M5 Hedge done 26%. Have it running on 8 pairs and currently in 0.9% drawdown. No drawdown control. Good job, Harold. Yeah, M5 Hedge is the nuts when it's working. When it's not working, it's the scare the crap out of you, which is why I used the H1 hedging, because it's less scary. It's still scary, but it's less scary than M5. But M5 will produce. M5 hedging is by far the most profitable strategy with the EA, but it will go into serious squeezes at points, because it does. So, but yeah, good job, 26%. But this is the thing, isn't it? You bank 26, you bank 26, you bank 26, you're 75% up in a quarter. Then all of a sudden you go into drawdown and make a 6% loss, a 12% loss, and then you get a break even. The drawdown hits 45%, and then it comes back to about 20%. It's still 75% up when it's working. Long term, it's brilliant. But I can't do it. I can't sit in the drawdown. It goes into too much for me. It's too scary. It's the sort of a strategy, and I've said it before, sort of strategy, you stick on a VPS, you let it run, you don't look at it. If you look at it, you'll crap yourself. But it does make a lot of money. Like I say, this H1 hedging made 148% return, wasn't it? 145% return in 9 months last year. That was in 20 to 30% of drawdown on a couple of occasions. But 140% return, it's good hedging. You're always winning, because you're hedged. There's always going to be a hedge on. There's always going to be a trade in profit when there's a trade in drawdown. So there's always profit. You're always going to bank. And as long as the market goes up and down, they'll all work. It's just a case of you're going to take heat because you're always wrong. Whereas with H1M5, we're quite often right and we're not wrong. With hedging, you're always wrong. Good. Also running M5 hedging without RSI. We'll share the results with time. So far, crazy good. Yeah, it is good. Very good. New news dropped 3.5 billion in Brazilian mining. BRICS, Cabal shaping up slowly but moving forward. Yeah, Cabal. Yeah, it's going to be one of those things with BRICS. It will affect the US and the rest of the world at some point, but we never had it before. We don't know how it will. It might be that we start introducing the yuan and the real into our trading portfolio, and they become a minor. They may become a major. Yeah, I don't know. So we may be trading the Chinese and Brazilian currencies. Mexican, I don't know. We'll adapt. If they become dominant, they will become part of FX crosses. So They are part of FX crosses. They're just exotics at the moment. Doesn't mean they're going to stay that way, does it? So, but until we start seeing tradable conditions on them, which I haven't checked for a while, but until we start seeing that, everything's working as normal, isn't it? So this is why I'm running 8 pairs to reduce exposure. So far, not gone above 99%. Yeah, good. And you've still done 26% off of 9% drawdown. Yeah, 3R. Brilliant. Can't go wrong there, can you? Right, I'll leave you there. Anything you need, let me know in Telegram. I'm going to get on with some coding. I'll be back this afternoon, 2:20 for the New York session. We will look at the impact of the CPI, if there has been any. We'll see what non-farm employment change has done and the Canadian GDP. And then we will get prepared for FOMC. So I suspect we will have a very quiet morning and a very quiet day. It's unusual for us to get very large movement ahead of FOMC because obviously the market wants to wait until it knows what the US is doing. So that will be obviously this evening, and then we'll have a look at the fallout of that and what has been said tomorrow morning. Again, tomorrow, I don't think I'm going to trade indices tomorrow. Not with that. I doubt the FTSE will do much tomorrow morning. We've got Lagarde speaking at some point in the morning, and we've got news coming out at 10 as well. So, don't know. I will see. Demetrius, I run M5 hedging with 0.1% risk instead of 0.2, sitting in 5 to 10% drawdown, 16% profit since the 9th of January. Cool. Yeah, M5 hedging does not have to be scary. You're quite right. And it can be. So be prepared. Yeah, I just showed you my P&Ls for the last year in screenshots. Can get scary. But as long as you're prepared for it, that's fine. Don't forget, your account is risk. If you use 25% of your risk, you're only using 25%. You've still got 75% buffer. Think of it that way. I'll let you go. Anything you need, let me know. Other than that, I'll be back 2:20 this afternoon, 7:50 tomorrow for Frankfurt. Have a good morning.